Okay, put on your camera, please. Get a result. Next one. Better. All right. What happened? What happened to your first one?
I didn't have time to do the question.
But do you know how to do?
Yeah, the question one and question two. The question two. I've like out of time just to understand the question. Then in the midway, then I understand it. Oh, I need to do it hurry. Then I out of time for question three.
So meaning that is showing lack of practice. So you have to do a lot of practice. And then you see, for the second test, you can do it. I'm sure you score as high as possible because the test one will be 50% and test two another 50%. And in order to pass the coursework, the threshold is okay. And during the exam, bear in mind if you do the exam, make sure you time yourself. After you have to be disciplined. After 20 minutes, if you have not finished, move to another question. 20 minutes, move to another question. Until the last 20 minutes, okay, that will be the time you finish all the unfinished questions. Because the questions are designed, some easy, some difficult, different level. So meaning if you focus on one question too long, so you don't giving yourself a fair time to look at the easier question. Okay. So like what I've stated in the test school, you know what is coming out. In the exam, you don't know what is coming out. But that is more difficult. No? So since I've given you, like the tips of what test school, so try and focus on that. Like let's see, what did I give you? Just going to come past your coursework. So the first one, question one, you will be given a trial balance, but the entry in the trial balance is not correct. Okay, so you have to correct it. Like make sure you have to classify them like asset and expenses. Of course, it will be on the debit side. Okay, and equity, liability, okay, and revenue should be on the credit side. So if you look at the item, okay, not an asset, okay, not an expenses, so it should be on the credit side. Okay, and then you identify what kind of error is this. So this is an error, which is we make the wrong entry correct side. Then next one you'll be given. Let's say if you have sales invoice, unreported sales invoice, what would be the effect? Of course, what is the entry? Double entry for invoice. Invoice means credit sales, isn't it? Sales invoice, credit sales. So the double entry is debit, credit receivable, credit sales, isn't it? So this is the effect. Your sales, again, will be understated by that amount, and then your credit receivable also not recorded. So that is the effect. Can you understand? Yes, Alvin, saying something.
No, never mind.
And then you'll be given all the details in the trial balance and do the statement profit or loss. Okay, that is the first question. So you have 4 subsections. For A part, we have A, B, C, and D. And then B part is only preparing the statement profit or loss. Okay, so make sure you follow the format. And for question 2 is accounting concept. So I already stated there what are the accounting concept related. So now you just need to, read on all the accounting concept, understand it, and then you need to identify from the statement given. So you need to relate which accounting appropriate accounting. So, okay. And question 3, you'll be given a list of expenses. Then you classify the expenses, whether is it capital expenditure, capital expenses, or revenue expenditure or revenue expenditure. Now, the difference is, remember, capital expenditure is related with the cost of buying the non-current asset that is being used in the business. Not only the cost of the non-current asset, but also any incidental cost or related cost in order to bring or in order to make the non-current asset free. My voice not clear. Can you hear me? Sorry.
Can
Oh, not clear. Okay, thank you for informing.
can hear.
Then because of the internet time, so let me use my.
Okay, what about now? Is it better?
This one more clear.
Okay. What I was saying, so question 3, you'll be given a list of expenses. So you need to identify which one is capital expenditure and which one is revenue expenditure. So how do you identify this? Okay, if it's revenue expenses, it is related with day-to-day operation of the business. Okay, and then for capital expenditure, any cost that is related with the non-current asset, as well as any incidental costs in order to bring the asset, the non-current asset to the business, and any cost related to make it operational. That is capital expenditure. So you'll be given the type of expenses, then you identify that expenses, capital expenditure or revenue expenditure. And the B part is you calculate the depreciation. Either, I don't know which method, reducing or straight line. And then after that, you do the recording into the depreciation account and accumulated depreciation account. So that is the test that we're going to have on Friday night. Okay. So now, year-end adjustment, what we have covered in year-end adjustment. Okay, we have 2 methods. So one is, we call it one-stage method, and the other one is 2-stage method. So either of this question, either of this method will be asked in the exam. So how do you identify whether the question wants one-stage method or 2-stage method? So you look at the requirement. Let's say electricity. Electricity is an expenses, but if the requirement stated there, open up or record the following transaction into electricity account, first one. B, accrued electricity, meaning if they have this kind of question, this is 2-stage method. But if the question record the above transaction into electricity account, commission receipt account, so meaning only mentioning the expenses, individual expenses, individual revenue account, meaning this is 1-stage method. Okay, so the trick is, if it's 1-stage method, it's easy, but then you only have to be able to identify accrued expenses is an expenses. Sorry, accrued expenses is liability. So credit balance. Closing, opening, credit balance. Okay. If it's accrued revenue, it is an asset. Opening, closing, also debit balance. Prepaid expenses is an asset. So opening and closing must be debit. And a prepared income, this is a liability. So opening and closing. Okay, when I said opening and closing, I'm referring with balance BD is opening. Balance CD is closing. Okay, it will be credit if it's prepared revenue. Okay, now today we are going to learn a new topic, bank reconciliation. Now, before we continue, do you have any question in regards with year-end adjustment?
No.
No question, huh? Okay. Now, look at the learning objective. Whenever you do revision, okay, review back what we have learned. So look at this learning objective because these are the area that you're going to be tested. So cash book, you need to know cash book, you need to know bank statement, and then you need to know what is the purpose, the reason, the difference between cash book and bank statement, and then the format of bank reconciliation statement. So these are the things, the four things that you need to ensure that you're in control because these are the things that you're going to be tested on. So they're not going to test outside from this. Yeah. So cash book. Cash book is one of the prime entry, one of the 7 prime entry. Remember, we have 3-column cash book, the format. Okay, in the cash book, we have cash column, we have bank column. But what our concern in this topic is the bank column. So, this is prepared by the company, by the proprietor. Okay, what is the purpose? They are recording the cash transaction and they're recording the check transaction of business. That's why we have cash column and bank column. Now, in the cash book, known as a debit item. Okay, debit item because this is an asset. So debit item, if it's receipt meaning you're receiving cash, you're receiving check. So it will be recorded on the debit side. Why? Because debit item, any increase of a debit item will be recorded on the debit side. So what is receipt? So we will see that those deposit made by the business to the current account and any inflow of the money. Inflow means coming inside, yeah, increasing. So it will be on the debit side. But the opposite side, that is credit. This is only for payment by cash, by check. Okay, payment meaning this is withdrawal, so outflow, right? So prepared by the company. So in the business entity, cash book is regarded as an asset. But the bank statement is different. Bank statement coming from or prepared by the bank, meaning when they do the recording, they are recording based on the bank point of view and sent to client at the end of each month for current account only. So meaning the bank provide a bank statement every month without fail to the company. So those current account holder. And then inside the bank column, inside the bank statement, they showing the opening balance. Okay. They're showing the deposit into and then withdrawal from the account during the period and the closing balance. So meaning they are doing this in a statement form, not in a ledger form statement. So you will have a table form. Okay, you have a date particular, and then we have withdrawal, and we have deposit and balance column. So we have to understand how to read the bank statement. But bear in mind, in the bank statement, okay, since the money deposited by the business in the current account is not the bank's money, not the bank's money. So this is the business money. So they would treat, yeah, that money the bank is owing to the business. So it is, they consider it as a credit item, a liability to the bank, because they are holding the money of the business, which do not belong to the bank. So they classify this as a liability. Okay, so a credit item. That is why a credit item, whenever increase the current account balance, it will be on the credit side. Look at this, different, isn't it? Credit for deposit. For cash book, debit is for receipt. So make sure you understand this. Credit for deposit. If it's withdrawal, it will be on the debit side, because this is credit item for them in the bank. Okay, opposite of the cash book. So just remember this, opposite of cash book. So just remember one and you remember the other. You can remember the others. Opposite. This is the keyword, opposite of cash book. So client who are overdrawn. So meaning overdrawn means they have a debit balance. The debit total, okay, at the end of the year, at the end of the month, more than the deposit. So they have a debit balance in the bank statement. So these are considered as short-term receivable, meaning now this become an asset to the bank, okay, to the bank, not to the business, to the bank. And client with excess balance, meaning the deposit is more than the withdrawal in the bank, they are considered as short-term payable, like liability concept. So you must understand this nature. Okay, so that is cash book and bank statement. Now, by right, the cash book, bank column, and the bank statement closing balance should be the same, because they are recording the same transaction. But we have, in real fact, is in actual life, it will be different. It will be different. Definitely, it will be different. So that is why the business, they need an internal control in order to detect the different. That the different can be detected and can be solved. So that is why we have bank reconciliation statement. So this is what we're going to learn. We have a bank reconciliation statement. So first thing, you need to understand what is the reason, what is the objective, what is the purpose of preparing the bank reconciliation statement. So first thing, you have to ensure that this, okay, is not prepared by the bank. This is prepared by the proprietor, by the company, by the business entity. Okay, where in this statement they are comparing, meaning they have bank statement for January and the cash book for the same month, January. And then in order to identify, they compare the bank statement. So after that, they identify, the next process is they identify the errors. And then they explain the errors. They identify the differences. They explain the differences between the two. And finally, to reconcile the closing balance between the two. Reconcile, meaning they want to make the balance in the cash book, bank column, same as the balance in the bank statement. So this is what we call bank reconciliation statement. So we need to identify first the error and the differences, then you reconcile them. So bank reconciliation is an essential, meaning is a must for any business entity, because this is one of the internal control activity, internal control, meaning a type of control that the business must have, in the company, that must be undertaken every month, meaning they have to do this every month to ensure the bookkeeping record of the proprietor or the company are accurate and there are no errors in the bank record. So there are two things. The purpose is they want to ensure what we have in the cash book in the bank column is accurate. And in the bank statement, there is no error. So this is a crucial measure, meaning enabling the business to know its cash flow position accurately. Okay. So that is the purpose. Now, let's see what could be the possible reason making the cash book and the bank statement different. Okay, we have two. The first one, item in the bank statement, but not yet recorded in the cash book of the business. And the other one is time different. Item already recorded in the cash book, but not taken up in the bank statement. Okay, the third one, error in calculation. This is error. They're supposed to be two only, but then because of some, because nobody's perfect, isn't it? Even the bank also make an error. So we have error in calculation or recording receipt and payment. Okay, so we have to correct this error. Okay, so let's go through one by one. Now, the first one, item in the bank statement. What is the meaning item in the bank statement? It is recorded in the bank statement, but not yet recorded in the cash book of the business. So in the cash book, we have not recorded. How do we identify this? We do the ticking. We do the ticking. You know what is ticking? So we have a bank statement and we have the cash book. Okay, so we just do the ticking like this. Okay, let's say if you have 1,000 in the bank statement, so in the cash book also you have 1,000, so you do the ticking. This is ticking. And then in the cash book you have 2,000, but in the bank statement none. So this one you don't tick. You only tick if this appear in the bank statement and also appear in the cash book. So if this one, 2,000, you have in the bank statement, but you don't have in the cash book, you don't tick. So by doing this, you see, you can know this is in the bank statement. See, this is item in the bank statement, but not yet recorded in the cash book of the business. So that is how we identify. So if we have this, unticked in the bank statement, what is the action? So the cash book will need to be revised. Okay, meaning you have to update your cash book. So you have to identify this 2,000, is it withdrawal or is it deposit? So sometimes they don't give you directly withdrawal or deposit. They only do debit and credit. So with the understanding, if it's debit, it's withdrawal. So if it's debit in the bank statement, so you update in the cash book on the credit side. Okay. If it's credit in the bank statement, then you have to update in the cash book on the debit side. So that is how we do updating in the cash book. So that is the action. So what could be the possible transaction that would be in the bank statement but not in the cash book? So these are the items. So we are looking at the debit in the bank, debit by the bank. So debit means is withdrawal. Okay, credit means this is a deposit. So make sure. So if it's in the bank statement on the debit side, when you update in the cash book, it should be on the credit side, withdrawal. Okay, for this one, credit in the bank statement, when you update in the cash book, it should be on the debit side. Are you clear? Can you understand what I'm saying?
Yes.
Okay. So the withdrawal, debit in the bank statement. So we have bank charges, stamp duty, bank interest, direct debit, standing order. Now, what is bank charges? So these are the charges charged by the bank for all the services the bank has given to the business, rendered to the business. Like the bank gave overdraft facility, the bank gave banker's check, the bank gave bank draft, telegraphic transfer. So all that you have a certain charges. So this is what we call bank charges. So it should be on the credit side. Yeah, I mean, when you update into the cash book, it should be on the credit side. But in the bank statement, it will be appearing on the debit side. And then stamp duty on checkbook. So stamp duty, because in order to ensure, I mean, in order to make the checkbook legalized, meaning you have to put a stamp duty. The stamp duty you have to pay to the Inland Revenue Board. So because only Inland Revenue Board, they have the stamping machine. Okay, to legalize the checkbook, so they have to do the stamping. So that stamping need to pay to the Inland Revenue Board. So this is charges. So it will be on the debit of the bank statement and credit in the cash book. Okay, so bank interest. Bank interest, let's say if the company has a loan or bank overdraft in the bank, so they have to pay the interest. So normally the bank will charge the interest directly debit to their current account. Okay, and we also have direct debit payment. Direct debit payment is referring to instruction by the business to the bank to make direct payment for the amount owing to a certain supplier from time to time. So meaning you can instruct, the business can instruct the bank to do a direct debit. Okay, the bank will do the payment to the bank of your supplier. So based on your instruction. And the last one is standing order. Standing order, this is payment. Okay, standing order is an instruction by the business to the bank. Yeah, they have to make a fixed amount payment every month. So they have to fill up the form, okay, and the bank will do automatic, payment to that with the fixed amount to that particular entity. Like for instance, we have insurance premium, rental, loan repayment installment. Okay, the bank will keep on paying this every month until the standing order is rescinded or stopped by the business. Okay, so standing order payment, standing instruction by the business. So all these are payment. So it will be debited in the bank statement and credited in the, when we update into the cash book, so you will credit in the cash book. Now, so whenever this payment made by the bank, like bank charges, stamp duty, bank interest, direct debit, standing order, the bank will automatically debit into the current account. So the business will not know until they receive the bank statement. Okay, so that is why it is not recorded in the cash book. So this will not be ticked, will not be ticked. So you have to update into the cash book. So when you have all this item, then you have to record on the credit side of the cash book. Okay. Next one, credit. Credit in the bank statement. So this one, when you update your cash book, it will be on the debit side. So what could be the credited item? So we have credit transfer. Okay, credit transfer is referring to the amount paid by customer directly through bank transfer. meaning if you have a trade payable, so the trade payable straight away transfer the money to your account. So this is what we call credit transfer. Okay, you wouldn't know, the business would not know until the business receive the bank statement. Okay, and then next one is dividend receipt or interest receipt. So dividend receipt, let's say the company that your business bought a share and then they declare a dividend, they directly, transfer the dividend into your account. So dividend which have been credited directly into the bank account. Now, interest received. This one, let's say if you have a fixed deposit in the bank, okay, the bank will transfer the interest that you earn from the fixed deposit into your current account. Okay, they credited directly into the bank account. And the last one is other transaction, which the business had not been informed until when the bank statement is received. So all this, the business will not know until they receive the bank statement. Okay. Now, next one is, this is time different item. Time different item, what does it mean? The time the company record, okay, in the books different from the time the bank record in the bank statement. So this is what we call time different item. So what is this? Item already recorded in the cash book. Okay, because when we receive the check, what can how this possible to happen? Okay, when the business receive the check from the customer, let's say, okay, immediately the business will record into the cash book on the bank column on the debit side. Okay, debit bank, and then we credit the trade receivable. Okay, reduce the trade receivable, isn't it? But even though you deposit the check today, it will not be in the bank system immediately. It need to be, it can only be cleared if it's a local check 3 days later. So what if this deposit happen at the end of the month? So I mean, this amount will not be recorded in the current month, but only recorded in the following month. So therefore, when the current month bank statement reach to the business, it will not appearing in the bank statement. So that is one of the time different item recorded in the cash book, but not in the bank statement. So what is the action? If you have this, okay, we also do the ticking. We do the ticking. So let's say this is your bank statement and then your cash book. So your cash book, you already recorded. Okay, deposit, the check number, 10,000. But it is not in the bank statement, so we don't tick this. So by knowing this is not ticked, okay, so this is time different item. So what is the action? If it's unticked in the cash book, the bank reconciliation will need to be prepared to explain the difference. So we have to show this 10,000 in the bank reconciliation statement. Okay, so this one, if this is deposit, we call this as uncredited lodgement. You need to internalize this word, uncredited, meaning the bank had not credited. Lodgement, meaning the deposit. Okay, the bank have not credited the deposit, not credited the lodgement. Okay, so the bank termed this as uncredited lodgement or uncredited deposit. Okay, so there are some check received and deposited into the bank account. Okay, this is the explanation, but not yet cleared by the bank. This receipt has already been debited into the cash book, but not yet acknowledged by the bank, although it will be in a short time when the check is eventually cleared. So this results in the cash book showing a higher balance at month end when compared with the bank statement. So check take about 1 to 3 days to clear, depending on the location of the issuers and the recipient bank and whether they are of the same bank. So uncredited lodgement usually involve deposit received towards the end of the month, whereby the deposit have not been cleared when the bank closes the account and the bank statement are prepared to be sent to the respective account holders. Okay, so uncredited lodgement meaning it's already inside the cash book but not in the bank statement. So normally it happened at the end of the month. So this will appear in the bank reconciliation statement under this heading, uncredited lodgement. Now, the next one is unpresented check. Okay, internalize the word unpresented check, meaning the check that is being issued by the company, but the recipient of the check did not present it to the bank yet. So that's why we call it unpresented check. So there are some check issued where recipient have delayed in depositing into the bank account. Okay, why they unpresent, they delay the depositing into the bank account. So this already been credited in the cash book, but not yet withdrawn from the bank account. So therefore, the bank statement will show a higher balance. Okay, because we already deducted the cash book because this is payment, isn't it? But in the bank statement, it's not been recorded. So the amount is still credit balance. So it will be higher than the cash book. Okay. So these are the two things that it will be appearing in the bank reconciliation. Now, the last one is error in calculation or error in recording. So either receipt or payment. So we have an error of calculation. Calculation meaning when we calculate the receipt lower than the actual amount, or when we calculate the payment lower than the actual amount. Okay, and when we record the receipt, record in error. It's supposed to be receipt, but you record on the credit side. You record as a payment, or you record the actual is payment, but then you record as a receipt. So this is error. So most error likely to be made by the business, but the bank also. But it's conceivable that the bank sometimes make mistake too. So meaning we have two types of error. One is error in the cash book. So error in the cash book meaning the business make the error. Okay. If the business make the error, so you have to correct it in the updated cash book. So these are the error that we learning. One is recording error, omission. Omission. Do you understand what is omission, class? Omission means we did not do the recording. We omitted. Yeah, we omitted. We overlooked the transaction, so we did not do the recording. That is omission. And then casting error. When we do the calculation using the calculator, because too many figures, so you make an error. Okay. Entries on the wrong side. Entries on the wrong side meaning like when we do the trial balance. So sales you put into the debit column. So this is entry on the wrong side, isn't it? Sales supposed to be on the credit side, but then you record it on the debit side. Purchases supposed to be on the debit side, expenses, but then you record on the credit side. So entries on the wrong side. Okay, that is the meaning. Okay, so the error made by the bank, meaning error in the cash book. So when we do the correction, okay, the action, so we have to amend the cash book. But what if the error made by the bank? If error made by the bank, so what are the examples that we have bank make an error? Check withdrawal from other client wrongly entered, meaning because probably the client withdraw, okay, the check, client A, but then the bank recorded in client B. So this is wrongly entered. Or deposit by other client, wrongly entered. So C deposit the check, but then the bank go and record into client D. Right? Error in the bank charges. So probably the bank charges they have recorded in the bank statement, okay, undercast, meaning they recorded lower than the actual amount. Okay, so this is error. Now, whenever we have this error, whenever this example happen, okay, how do we rectify it? So the action is show the error in the bank reconciliation statement. Inform the bank about the error so that this error can be rectified in the following month bank statement. Okay, so we have to record in the bank reconciliation statement, not in the cash book. So the error made by the business entity then record in the cash book. Error made by the bank will be in the bank reconciliation statement. Okay, this one. Now, which amount should be shown in the statement of financial position as bank under current asset? There are two possibilities. Okay, one is revised cash book, bank statement balance, or the cash book. Bank statement balance or revised cash book, or cash book. So it should be
cash book.
yes, revised cash book. Why? Because revised cash book is the most complete entry. Because in the revised cash book, they already recorded all the transaction recorded in the cash book. This one, time different. And then also they already recorded items in the bank statement because they already update, isn't it? So that is why the balance on the revised cash book will be used as a balance in the statement of financial position under the current asset. Okay, so this is the format of bank reconciliation. So you need to put the name of the heading, yeah, of the statement. So bank reconciliation statement as at. So make sure you internalize all this heading, by heart the heading, so that you don't have to refer. Otherwise, that makes your face of doing the answer very, very slow. Because sometimes even the heading of the statement also you need to refer from your notes. So that's make it, so slow. Okay, how do you remember this? Remember the format. Once you remember or memorize the format, so it will make faster, yeah, faster doing all the answer. So this is a statement. So meaning, and the purpose of this is reconciling. So the heading will be bank reconciliation statement, and the word will be as at, just like a statement of financial position, because in statement of financial position is consisting of all the balances that to be carried forward. Yeah, meaning we do not close off like revenue and expenses. So that's why even the bank reconciliation, because we are showing the asset, so we must end the heading of the statement as at. So bank reconciliation statement as at 31st of January to 2021, let's say. Okay, and then the format Okay, we have balance as per bank statement, and the bottom part is balance as per cash book, revised cash book. Okay, revised cash book meaning the cash book already been updated. All the transaction that is recorded in the bank statement, but not in the bank in the cash book. Okay, so remember this word. You start with balance as per bank statement, and you end with the wording balance as per cash book, per revised cash book. Then you have the total line here. Now, balance as per bank statement, you need to add uncredited lodgement. Okay, remember this, uncredited lodgement. Why uncredited lodgement? Because these uncredited lodgement in unpresented check, these are the transaction recorded in the cash book, but not recorded in the bank statement. Okay, the second time different. Yeah, time different. Huh? So whatever the action, remember the action just now? Okay, it will appear in the bank reconciliation statement. So that's why we add uncredited lodgement. We less unpresented check. This item already recorded in the cash book. So that's why your purpose of doing this bank reconciliation is you want to make the balance in the bank statement same as balance as per cash revised cash book. Okay, so that is why you need to do the same recording made by the revised cash book. So which is in the bank statement, they have not recorded the uncredited lodgement. They have not recorded the unpresented check. Okay, so we add uncredited lodgement. Why we add uncredited lodgement? Tell yourself. The reason is because in the cash book, it was recorded on the debit side. This is receiving money. So they have recorded in the cash book, so we have to do the same thing in the bank statement. That's why we add uncredited lodgement. Now, why we less unpresented check? We less unpresented check because in the cash book, it is recorded as a payment, isn't it? Recorded as a payment, and it's already been recorded. So we have to do the same thing with the bank statement. We less unpresented check. Okay, why I emphasize on this format? Because sometimes the question can be changed, do the bank reconciliation statement by starting with balance as per revised cash book. Now, if you start balance as per revised cash book, all this will be the opposite. So if you start balance as per cash book, and the bottom part, your objective is to get the balance as per bank statement, then whatever that you recorded in the cash book, now you have to reverse it so that the amount in the cash book, revised cash book, same as the balance as per bank statement. So this will be balance as per cash book, revised cash book, add unpresented check, meaning we have to reverse, which is recorded in the cash book on the payment side. Now we add it back. Okay, and then we need to less the uncredited lodgement, meaning we have to reverse, okay, which is already recorded in the cash book, uncredited lodgement, so that the balance will be the same as balances for bank statement. Can you understand why I do this explanation? There are two. Okay, we follow this, okay, meaning your bottom part is your objective. You want to make as balance as per revised cash book. So in order to make balance as per revised cash book, so the bank statement have to do the same recording as the revised cash book. Okay, but if you are required to start with balance as per revised cash book, and the bottom part is balance as per bank statement, then it will be reversed, just like this. Okay, balance as per cash book revised, you need to add unpresented check, then less uncredited lodgement. So either way, yeah. So it depends on the question. But if there's no specification by the question, so I suggest you follow this one. Okay, you need to add first, then followed by less. Okay. Any question? Can you understand that?
A bit, yeah.
Okay. Now, error by the bank. Error by the bank, it must be shown in the bank reconciliation statement. Error by the business, it will be updated in the revised cash book. It will be, adjusted in the revised cash book. Now, if you have an error by the bank, so there are two possible ways. So you have to understand the nature of the error first. If they have overstated the payment, meaning they have recorded the payment more than the actual amount. So when you correct the error, so you have to add the error by the bank. Okay. If they have understated the payment, so meaning you recorded the payment side lower than the actual amount. So when you do the correction, so you have to do less error by the bank. Okay. Now both formats are acceptable for examination purposes. Students are advised to choose whichever format that they are comfortable with. So, but the question they can change. So make sure you both of this method you know. Okay, let's go through this illustration number 1. So we need to do the ticking first. We do the ticking. So this is the cash book, and this is the bank statement from the bank that we receive. Okay. Now we do the ticking. Okay, so the opening balance 2005, same opening balance in the bank statement, isn't it? Okay, why this is the same? Because we have done the bank reconciliation previous month. If you have not done, so there will be a difference of the opening balance. So it will be very tedious. Okay, so debit side compare with the credit side, and then credit in the cash book compare with the debit side. Now 800 tick. This one also tick. 600 tick. 970 tick. Okay, so the bank statement all is tick, but the cash book we have, you see, look at that red color. So this is not tick, untick in the cash book. So meaning if all the bank statement is being ticked, so you don't have to do revised cash book, but we have to do the bank reconciliation statement because we have untick. Okay, untick in the cash book, revised cash book. Untick in the reverse cash book. So this will appear bank reconciliation statement. Okay, untick. In the bank statement. So this will appear in the revised cash book. Okay, class. So this is actually very easy. Okay, this analysis you go through on your own. Now, resulting from this, okay, we have the bank reconciliation, which is, okay, balance as per bank statement. You need to get the bank statement closing balance, 1,730. Okay, look at this is the closing, 1,730. Okay. And the cash book, yeah, when we do the, I mean, we don't have revised cash book, isn't it? Because all the bank statement is being, ticked. So we only do bank reconciliation statement. So balance as per bank statement, okay, you have this figure. And then balance as per cash book, you also have this figure, 2,660 from the question. Look at the last, okay, the closing balance of the revised cash, not revised, the cash book in the question, isn't it? You have closing balance 2,660. So you already have this figure. So this is the figure that you need to check whether you have, you can check whether this is correct or not. Okay, if you don't get this amount, meaning something is wrong somewhere here. Okay, so we have uncredited lodgement that is on the debit side. Yeah, this one. Okay, debit side. So this is uncredited lodgement. For this one is unpresented check. Okay, so plus uncredited lodgement because we start balance as per bank statement, isn't it? 1,980. And then less unpresented check, 1,050. So if we get exactly 2,660, so all of these are correct. So you already know whether you have made the correct answer or not. Okay? You don't have to wait until I do the marking. All right. Next. Item in the bank statement, not in the cash book. So now we do the ticking again. So this one, 2005, okay. Also tick. Already tick, huh? Sales 800. So this one 800, huh? And then 600, we have 600 payment, huh? 600, 970, okay, done. So leaving, okay, this red color, yeah, not tick. So this one will be uncredited lodgement, and this one will be unpresented check. Okay, uncredited lodgement meaning already recorded in the cash book, but in the bank they have not credited it. So we call it uncredited, yeah, lodgement. This one is already been recorded as payment in the cash book, but in the bank system it's not being presented yet. So unpresented check. Now, in the bank statement, you have this interest on fixed deposit, unticked. We have standing order, we have bank charges, we have checkbook, we have credit transfer, we have dividend receipt, not being ticked. So meaning these are unticked in the bank statement. So we need to update into the revised cash book. For this question, we have to do revised cash book. So this is debit side, withdrawal. Credit side is a deposit. So this one on the debit of the revised cash book. And then this one is on the credit side. Now, when you put the balance as per bank statement, take the last balance, 2,000. Same goes with the cash book. Take, okay, when you do the revised cash book, okay, the opening balance using the closing balance. So that's why, okay, when you do the revised cash book, so balance brought down 2,660. Okay, and look at the credit side of your bank statement. So you have interest received 70, update into your cash book. Huh? Credit transfer 250, dividend received 105. So this is from the bank statement, untick in the bank statement on the credit side. And on the debit side of the bank statement, okay, we have bank charges, standing order, checkbook. Okay. So now we have updated. Okay, we have done with the bank statement. So now we close this account, we balance off this account. So debit, yeah, total, which is 2,660 plus 70, plus 250 plus 105, we have 3,085. Okay, more than the credit side, the payment side. So which is when you minus 120 minus 20 minus 15, so you have balancing figure, which is debit balance 2,930. Debit balance. This is debit balance. Okay. Total debit 3,085 more than total credit, and the difference is 2,930. So debit balance of 2,930. And use this balance in the bank reconciliation statement. So use it as balance as per revised cash book 2,930. So we already have this figure, predefined figure. And then balance as per bank statement. Okay, the last row of the bank statement. Okay, 2,000. Then now we look at the revised, the cash book, untick in the cash book. Untick in the cash book, we have on the debit side, uncredited lodgement. Then we state one by one. One is commission received, and then trade receivable. And moving on to the credit side. So the credit side will be less unpresented check. So we have two check on the credit side, which is 550 and 500. Then 3,980 minus total unpresented check 1,050. So we get exactly the amount 2,930. So if we get exactly this amount, meaning we have done the bank reconciliation statement correctly.
So we need to do two statements.
Two working. One is revised cash book, this one, only the bank column. And the other one is bank reconciliation statement as at what is the date, depending on the question.
Oh,
Farah, how are you doing?
Okay.
You understand?
Yes.
Calvin?
Okay.
Be honest to yourself, because you know how many weeks already? 5 weeks already. So you know me, I know you. So don't be shy. You just tell me whatever. There's no such thing stupid question. So we are learning here.
I just haven't practiced only.
Huh? Yes, practice. So you have a lot of tutorial question. I know it's hard, but then try to understand. And if you don't understand, you can always ask Miss Chan, or you can always ask me also.
Well, tomorrow count as the test 2 already.
Come again?
Tomorrow is test 2.
Not tomorrow. Not tomorrow. Next week.
Or next week.
I said next week. Now is week. What week? Week five. So week 6.
Okay.
Okay.
is it the same time?
Hmm?
Is it the same time as test 1?
Oh yeah, same time.
Okay.
So you have 1 more week to get ready. Okay.
Okay.
Now the next illustration. So this is bank overdraft, meaning you will have negative bank balance. Okay, meaning your cash book also credit balance. Your bank statement you will have debit balance. Okay, like what we have here. This is credit balance. Okay, credit balance meaning negative. Supposed to be the bank column should be debit balance, but then since this is current account because of overdraft facility, that's why we can have, there is a possibility to have a credit balance. So the bank statement also, look at this, debit balance. So this is credit, this is debit. So meaning negative. Now in the bank, when they record us, the business, okay, they record it as an asset to the bank, because now the business is owing to the bank this amount, 3,000. Okay. And the deposit, okay. So you tick 250, 450, 450. Right? And And then this one we have not. I mean, we only record in the cash book, but not in the bank statement. So you don't tick. And then now moving on to the credit side. Okay, 190 we have. So tick. But 695 you only record in the cash book, but not in the bank statement. So you don't tick. So same goes with this. Okay. You have in the bank statement, but not recorded in the cash book. So by doing this ticking, so this actually highlight to us which are untick, yeah, in the cash book, untick in the bank statement. So untick in the bank statement, we update into the revised cash book. Untick in the cash book will appear in the bank reconciliation statement. So this 215 will become uncredited lodgement. And this equipment, 600, May Enterprise will become unpresented check. Okay. Now, when you start with revised cash book, make sure you use this balance. So this is credit balance. Okay. When you put into the bank reconciliation statement, use negative balance as per bank statement. Now, in the revised cash book, like what I've said to you, opening balance. First thing, opening balance. Record, 3,220 on the credit side. Okay, from the question, the bottom part of the cash book. So this is revised cash book, bank column on it. Then update your revised cash book. Okay, the debit side. Okay, the credit side of the bank statement you record on the debit side, 55. Direct credit, 950. And then look at the payment side of the bank statement. That is on the debit side of the bank statement. We have standing order, 170. We have bank charges, 30. Okay. Now we have done. We already updated your revised cash flow. Then you total. Okay, 3,220 plus 170 plus 30. Okay, is 3,420. Higher than the debit side. Okay, higher than the debit side. So meaning credit total higher than the debit side, minus 55 minus 950 by 2,415. So this is credit balance. Okay, credit balance 2,415. Then put into the bank reconciliation statement, revised cash book, balance as per revised cash book. So make sure you put negative. Negative 2,415. Okay. Now then, so then you start bank reconciliation statement as at 31st of May 2017, and starting with balance as per bank statement. So take the last row of the bank statement, which is negative 1,935. But in the bank statement, it doesn't show negative. They only show you debit. So debit means negative balance. Okay. So negative 1,925. And then follow the format, add with uncredited lodgement, less with unpresented check. So uncredited lodgement, look at the revised, the cash book. Yeah, in the question, the cash book in the question, we have one untick in the cash book, Soda and Company. So 215. Then done. So move on to the credit side of the cash book. So on the credit side, we have unpresented check, 2, equipment, and May Enterprise. So minus 695. Now after that, use your calculator. Don't get, don't get the wrong answer. Okay, so we have negative. Okay, put negative in your calculator. 1,935. You plus, yeah, 205, 15 plus 215. Then you will have negative 1,720. So make sure you put negative in your calculator. So negative 1,720. Okay, this one you need to less total 695 unpresented check. So then you will have total negative 2,450. Now, so far, can you understand?
Yes.
Yeah.
Reconciliation always negative for this.
Come again?
The reconciliation always negative.
No, it depends on the question. So it depends on, this one. This is the question. Where you have a debit balance in the bank statement and you have a credit balance in your cash book. So this is negative. Only if you have like this, then you have negative. But the illustration number 2, we don't have negative, isn't it?
Oh,
Can you get the difference, Kelvin?
I think.
Huh? Okay, no?
I think okay.
Okay. The most important thing is now you understand. Tonight you have to revise back. Otherwise, if you wait until tomorrow, then you forget already. Isn't it? That's what happened. And you forget to, memorize it, like internalize. So when come to exam, when you want to do the answer, you have to refer. That's why that's make, the speed of doing the answer is very slow. So remember, the question are structured, only for a few minutes only. So that's why you need to sacrifice to memorize the format. Sacrifice. The only thing, the only ways how to score this, you have to sacrifice memorizing the format. Okay, but then this is beneficial not only during your exam, but when you working, also very beneficial to you. Okay, so let's continue. We can continue. Illustration number 4. Now this one, because we have different in opening balance. Why we have different in opening balance? Because previous month, this can happen if the company or the business entity did not do the reconciliation. If they miss the bank reconciliation previous month, this will happen. Okay, which is your balance here, the opening balance, not the same as your bank reconciliation, which is this 310. Yeah. Now we do the ticking first. So we do the ticking. Okay. Just a second. Okay, the cash book, 330 sales. So do we have this in the bank statement? Look at credit side, of the bank statement. We have 330, so we tick. $330. Okay. 180. Okay, this become uncredited lodgement because not tick. Yeah. We only have in the cash book, but in the bank statement we don't have. Then look at the insurance. Okay, insurance check number 108. Okay, but then we have 109 in the cash book. Okay, so 170 you tick. So in the bank statement, okay, 170. Okay, now before we start, we need to get this balance. We have to identify what makes the opening balance different. Okay, the technique is the first thing, you look at the check number. Okay, what record would be updated first when we make payment by check? Of course, the cash book is the most updated one, because this is the point where the business issue the check and give it to the recipient, isn't it? So, meaning, as you can see, 109, the latest one, okay, is 112. The earliest one is 109. So, meaning, if you have any check below than 109, so like 108 in the question, so that is already recorded in the cash book last May, previous month. But the bank only recorded during the current month, June. So that could be one of the possible reasons. So for sure, the check number 108, okay, that would be the possible reason. Okay, then the next thing is, okay, first thing you have to look at the column. So this is 750, isn't it? So look at the balance column. Can you see the balance column? Opening is 310, followed by 200, and then we have 750. So meaning up to this 750. So these are the transaction, the first two transaction that causes the difference. Okay, which is, you see, 310 here. So you need to determine, is this a debit balance or credit balance? What do you think, Noah?
Credit.
It is credit. Yeah. Normally, if it's debit, the bank would put the indicator here, debit. But if it's no indicator, there's no debit or credit, meaning we assume this is credit balance already. Okay. The money belong to the business. So 310, you minus 110. So that's why you get updated balance here, 200. 200 plus 550, then you have updated balance here, 750. So that's how this works. Yeah, the table of bank statement works. So 310 for debit, they minus. And then 200 for credit, they plus. Okay. So immediately we, because these are the causes of the difference, so now we have to tick. So why we have to tick here? So that you understand that this will not be included in your updated cash book, revised cash book, because this has already been recorded by the book previous month. Okay, same goes with this. 550 already recorded previous month in May by the bank, by the business, but then the cash book, but then the bank statement only put into the bank system on the following month. Okay, that is what we call time difference. Okay, so since we already tick, we don't include this into your revised cash book. So the revised cash book, only the blue color. That is, this is payment, this is deposit. So deposit 300, and then withdrawal 250 and 80. Okay, take closing balance. Okay, the bottom part of the cash book in the question, 790. Okay, and then record the credit side of your bank statement, which is 300, the blue color. 300. Now, done. Then you record the payment side that is on the debit side of the bank statement, which is bank charges, okay, 80. And we have error. Okay, how do we identify the error? Look at the check number 110. So 110, this one is 25. But in the bank statement, 250. So common sense, which one is considered as correct? The bank or the cash book?
The bank.
The bank, because the bank, they emphasize quality, isn't it? They seldom make mistake, but sometimes, occasionally, they do mistake. So meaning the 250 is the correct figure. Okay, so since this is the correct figure, so what we have recorded in the cash book is understated. Understand the nature of the error first. So we only recorded 25 in the cash book. In the cash book, we only recorded 25. So we have recorded understated the payment. Okay, understated meaning we recorded the amount lower than the actual amount. So how do we rectify this? How do we correct this? So this should be corrected in the revised cash book. Okay, as prescribed by your notes. Okay, must be error made by the business. So error must be corrected in the revised cash book. So when we record, so we need to decide, do we put on the debit side or do we put on the credit side? Now, we don't put on the debit side because if we put the debit side, we are increasing the deficit. Okay, the nature, you need to understand the error first. The error is we understated the payment. So meaning we need to put on the credit side. So the difference, 225, sorry, what is it? 250 minus 25. Okay, so 225. So that is why in the payment side, we need to put 225. And then you put the remark here, error in cash book. Then put the working, 250, the actual amount, okay? And then minus with the error we have made, 25. So we have to increase, okay, the payment side by 225. Okay, then we close. So debit is more. So we use 1090. Okay. Now debit is more by the credit side. Okay, we minus 1090 minus 80 minus 225. So we have a debit balance of 785. Okay, use that balance as per revised cash book, 785. So this is positive debit balance. Huh? Then balance as per bank statement, okay, 880, also positive balance. Then look at your cash book question. We have unticked on the debit side, known as uncredited lodgement. And moving on to the credit side, the payment side. So we have unpresented check, 175 and 100. So total is 275. Okay, by doing this, yeah, 880 plus 180, so we get 1060. 1060 minus 275, we get exactly the figure, predefined figure, pre-calculated figure of 785. So meaning we have made correct answer. Now,
Usually we do the revised cash book first before the bank reconciliation.
come again? Yeah, we
Usually
do the revised cash book first.
Oh, okay. So there's no such thing as to the bank reconciliation first.
Come again? What was it?
To the bank reconciliation, there's no such thing, right? Or is it possible?
Just hang on. I can't hear. Yeah, Noah, can you repeat back the question?
Is it possible we do the bank reconciliation first?
No, you
Sure.
can't because you don't have this figure.
Oh,
You don't have this figure.
oh, I see.
You only have this figure. So you don't have this figure to check whether you have done correctly or not. But you
Oh,
can
okay.
do at the same time now. Okay, you do all this format first. Okay, let's say before the exam, probably you already make your own. You already structure your answer. Okay, make 3 column here on the debit side, 3 column on the credit side, and then do the statement here. Okay, you just copy and paste into the answer booklet. Then, as you read, you record the question. Okay, when you tick, so you see what you have in the bank statement. Okay, untick, then record into the reverse cash book. And at the same time, when you see in the cash book, okay, untick, then put into the bank reconciliation. Simultaneously, okay, after you have put everything accordingly, then you close your revised cash book, balance off your revised cash book. Then once you get the figure, then put this figure into the bank reconciliation statement. Then calculate. If you get the same amount, then you are in the correct track.
Oh, okay.
Did I answer you? No?
Yeah.
Okay. Next one. Illustration number 5. So as this one, you see, the question can be different question. So the first one is do the ticking, but this one is in wording. I mean in wording. Yeah. So each wording you have to identify whether this is unticked in the cash book or unticked in the bank statement. Then you do accordingly. Like as at 30th of September 2017, the balance in the cash book of Extreme Trading was 80,515 on the debit side. So this is indicating cash book balance. Bank statement on the same date show a credit balance. Okay, meaning it's positive balance, but then different amount. So closing balance. So this you're going to use as balances per bank statement. And this 80,515 will be your opening balance for the revised cash book. Now, on investigation of the difference between the two sums, it was established the cash book had been undercast by 9,000 on the debit side. So, meaning error in the cash book. Debit side, meaning your deposit we recorded lower than the actual amount, undercast. That is the meaning undercast here. Okay, recorded lower than the actual amount. And then check deposited but not yet credited. This is uncredited lodgement. Okay, not yet credited meaning uncredited lodgement. Okay, this appearing in the bank reconciliation. Check drawn but not presented. Unpresented check. So appearing in the what do you call that bank reconciliation, unpresented check. So this one, number one, will be in the revised cash book. So show the correction to the cash book. So meaning your revised cash book, your opening balance, okay, 80,515. So this revised cash book balance, okay, opening from the information in the question. Then you record it, okay? According to the question, cash book has been undercast on the debit side. So meaning we have to increase the debit side by 9,000. So we put 9,000 on the debit side. And your remark on this, okay, you put error in cash book. Okay? Any error made by the cash book will be made in a revised cash book. And then you need to understand the nature of the error. So this one, your deposit undercast, meaning we recorded lower. So that's why we increase the deposit on the debit side, 9,000 here. So resulting debit total is more than the credit side. So we have a debit balance 89,515. So use this balance as per revised cash book, 89,515. And balance as per bank statement from the question, 111,230. So we have uncredited lodgement. We add uncredited lodgement, 20,820, and less unpresented check, 42,535. When we do the calculation, we get exactly the same amount of 89,515. So meaning, good, you have done correctly. Okay. Now, continuation on illustration number 6. Now, so far, do you have any question in 5? Can you understand?
Yeah.
Yeah.
My voice clear or what?
Clear.
Clear.
Yeah, clear.
All right, good. Now, illustration number 6. So this one is adjustment of error in the bank statement, meaning the error made by the bank. Now, on 31st of January 2018, a firm cash book show a credit balance of 1,500. Cash book. Okay, according to this question, cash book 1,500. So meaning this is negative balance, credit balance. If it's bank statement, credit balance are different. That is positive because bank statement, isn't it? But this one is cash book. So we have credit balance on this current account, which did not agree with the balance in the bank statement. So during the reconciliation, the following point were noted. So you were not given what is the closing balance of bank statement. So meaning we have to work backward. So not recorded in the cash book. This is appearing in the bank statement. Okay. So now you don't know whether debit or credit. So you just have to understand the wording here, the nature. Okay. Bank charges, meaning this one should be payment. Direct debit, also payment. Transfer from fixed deposit. So this one is deposit. Okay, you need to update in the cash book. And not recorded in the bank statement. So meaning you only have unpresented check. Recorded in the cash book. Oh, sorry. Probably on the bottom part, we have uncredited lodgement. So appearing in the bank reconciliation statement. And it was also discovered that bank had debited. Okay, this is debited. The firm account with a check of 1,000 in error. In error. So meaning we have to rectify this problem. But where? In the bank reconciliation statement. How? Okay, understand the nature. Debit means they charge the account. Okay, they charge the account, they minus 1,000. So meaning we have to add back this one. What was the balance of the bank statement? So meaning we have to work backward and know what is the closing balance of the bank statement. Okay, so how do we do this? First thing, we need to do reverse cash book. Okay, and put the credit balance brought down 1,005, and then update your cash book. Okay, that is, we have transfer from fixed deposit, as what I've told you, this deposit. So you put on the debit side 5,000, and then we have payment. Okay, bank charges 360. Okay, record on the credit side, and then we have direct debit 4,005, record on the credit side. Okay, after we have recorded everything, now we balance off this account. So we have a total credit more. So we put 6,360 as a total for both sides, debit and credit. Then we have a credit balance. So 6,360 minus 5,000. So we have a credit balance, credit total more than the debit total by 1,360. So use that as balance as per revised cash book. So you put negative 1,360. And then you record, okay, uncredited lodgement, you add uncredited lodgement, 4,300, unpresented check, 9,160 from the question. And then we have error by the bank. Okay, like what I've said to you, the bank overcharge, okay, charge the 1,000 by error, okay, to the account. So now to correct it, we add back that error, okay, 1,000. Can you understand why we add this? Because they charge the account wrongly by 1,000. So how to rectify this problem? So you add back that error 1,000. So that will cancel off the error made by the bank. Okay, right? Then
Yeah.
you move back. Huh? Okay.
Yeah.
Okay.
Then you move backward. So meaning you use your calculator, negative 1,360. Move. You move backward. Negative 1,360. Okay. You need to plus unpresented check 9,160. Then you get 7,800. Then you minus 5,300. When you minus 5,300, so you get the opening balance 2,005 positive. This is your closing balance for that particular month, yeah, on the bank statement. Try and digest. Can you understand?
So isn't it more convenient to put the balance of cash book on top first, then
Can also.
we add? No.
Can.
Okay.
You can do that. But this one is, since we already start always balance as per bank statement, so we just put like that. So just change this one, add, change this one, less.
Okay.
Okay. Now the last illustration. Is this the last one? Oh, this is the last one. You have another one, 8. Okay, this one, the company bank statement shows 7,150 direct debit, okay, direct debit, and 3,530 investment income. Okay, this is income that were not yet recorded in the cash book. So this investment income will be debit in the revised cash book. This one is credit payment in the revised cash book. The bank statement does not show a customer check received, 8,750. So this is a customer check received. So uncredited lodgement. And then check payment. This is unpresented check. Unpresented check. 4,000 for the purchase of second-hand motor van, which already been entered in the cash book on the last day of the accounting period. If the cash book shows a debit balance of 6,100, what is the balance that appear on the bank statement? Debit balance, cash book debit balance, so positive. So that's why your opening balance is positive. Balance brought down 6,100. Okay. And then, like what I've said to you, investment income will be debit because income receiving. And then direct debit is payment. So you put on the credit side. So resulting from this, okay, you have debit balance of 2,480. Then use this amount as balance for revised cash book, 2,480. Then you have the information on credited lodgement, like I said, okay, 8,750, and then unpresented check, 4,000. So you move backward. Again, the same thing. So 2,480, you plus 4,000, okay, you have 6,480. Then 6,480, you less 8,750, okay, more. So meaning you have debit balance in the bank statement, 2,270. Okay. Illustration number 8, the last one. Okay, on 30th of June 2017, Coco cash book show she had overdraft of 3,000. So meaning this is credit balance, credit opening balance on her account at the bank. A bank statement as at the end of June 2017 showed that she was in credit with the bank by 650. In credit. In credit meaning you have positive balance. Credit balance, 650. So because this is in the bank statement, because the statement here, bank statement. So on checking the cash book with the bank statement, you find the following. So this is all in wording. Okay, another way how this question will be set. Okay, if it's wording, then you need to understand the sentence. Check drawn amounting to 5,000 had been entered in the cash book, but had not been presented. So unpresented check. Okay. Check received amounting to 4,000 had been entered in the cash book, but had not been credited by the bank. So this one, uncredited lodgement. So all these are in the bank statement reconciliation. Uncredited lodgement. Now, on 29, Coco instructed the bank to transfer. Coco is the business. Instructed the bank to transfer interest received. Interest received on her deposit account amounting to 600 to her current account. Coco had credited, this is the wording, error, credited this amount in the cash book on 29 June. So he made a mistake in recording in the cash book. So you have to correct this. How do you correct this? Meaning we have overstated the credit side, isn't it? So we have to do double figure. Yeah, double figure on the debit side. One, to cancel this error. One, to do the recording correctly. Okay. On the other hand, the bank had wrongly delayed the transfer, which was made only on 3rd of July 2017. So the bank did not record. Isn't it? So error made by the bank. So it should appear in the bank reconciliation statement. So the nature is we have to increase on the debit side. Yeah, add. Now bank charges 35. And this is payment. So you need to update into your revised cash book. And the standing instruction to pay insurance premium 315. Okay, so record on the credit side. Bank charges and standing instruction. The payment side of cash book had been undercut by 100. Cash book. Okay, error in the cash book. So appear in the cash book, revised cash book. So had been undercut, meaning you need to record this, correct this error on the credit side by putting 100. Dividend received amounting to 2,500 had been paid direct to the bank and not entered in the cash book. So untick, yeah, in the cash in the bank statement. So you have to update your cash book. So this is dividend received, means debit side. Okay. And the last one, a check issued to JJ for 250 was replaced when it became outdated. So normally if the recipient of the check did not present the check for 6 months, it will automatically outdated, no more laku. So it has to be replaced with a new one. So this already recorded in the books. It was entered again in the cash book. So no other entry being made. So both, so meaning we have made error in the cash book. So correct this in the cash book. And both checks were included in the total of unpresented check. So in the bank reconciliation statement, also we have to do the correction because it's still under unpresented check. Okay. So then look at the question, indicate the appropriate adjustment in the cash book, meaning we have to update the cash book, prepare the statement reconciling the amended balance with that shown in the bank statement. Okay, meaning the bank reconciliation statement. So we do the reverse cash book. Okay, make sure, okay, you have a credit balance. Yeah, because stated credit balance at 3,000. And then update. Yeah, the first thing we have interest received. Okay, but then you see this is the correction. We have to double the figure because inside this 3,000, they have recorded the interest received from the bank, from the fixed deposit. But then they recorded on the wrong side, payment. So one figure to cancel, one figure to record. Yeah, that's what I'm saying. So you just put there, interest received, wrongly credited. So this is to rectify the error. And we have dividend received, okay, not recorded. So we record on the debit side, 2005. Okay, look at number 5. Dividend received amounting 2,500 had been paid direct to the bank, not entered in the cash book. So that's why you record in the debit side of the revised cash flow. Okay, and then number 6, yeah, check outdated. Like what I've said to you, because this is not, we have recorded previously when we issue the check. Okay, we recorded on the credit side. That's why we get this balance. We already recorded here check, the 250. But then when we issue the new one, we issue another new check because expired. So we have recorded on the payment side double. So we make an error. So we need to cancel one of this. So that's why we have to show the error in the revised cash flow. So in order to cancel this, that's why we make this entry, 250. So by doing this, this will cancel automatically the previous one. So only left the new issue check that is already recorded. So far, are you listening? Can you follow?
Yeah.
So as long
Okay.
if outdated, then we need to add back
Come again?
the outdated part. So if already like credited kan, then but it's outdated, so we need to debit back.
Yeah, just to cancel the figure. Because now if we don't cancel, you have two figures here twice. We recorded the same amount payment, okay, which this 250 have not been presented by the recipient yet, but already expired. And we issued a new one, also recorded. So we have to cancel one of them.
Oh, okay.
Okay. And then update the bank charges, standing order, and the payment under cash. Okay, the payment, remember the number 5. The payment side of the cash book had been undercast by 100, so you need to increase your credit side by this amount, 100. Error made by the business. So by updating all this error and all the entry, so you have updated balance, so which is total debit 3,950 is more than the credit side by 500. So we have balance BD 500. Then use this revised balance in your bank reconciliation. So 500 balance as per revised cash flow. Then balance as per bank statement. So we have in the question 650. Okay, show that she was in credit with the bank by 650 positive. In credit, 650. Then record the uncredited lodgement. Okay, stated in number 2, check received. Okay, 4,000, so plus. And then we have unpresented check number 1, 5,000. Okay. Then, like what I've told you just now, in the bank reconciliation, we have in this unpresented check 5,000 inclusive, which is 250 of not yet, because it is being carried forward from 1 month to another month, right? So it's inside this 5,000. So we need to adjust the amount. We have to correct it. So we have to cancel the old check. Check to Johnny, we cancel 250. Can you understand? We have to do the correction both, because not only the business making a mistake, the bank reconciliation statement also making the mistake, because inside the unpresented check, which is the total amount 5,000, is inclusive of all the outdated check and also the present check that is being issued, which have not been presented yet. So that's why we have to cancel the first one. Okay, so that's why we have negative 250 here. And since the bank also make an error where they have not updated the the interest received from the deposit account. So we need to add interest received, not yet credited. So by doing all this, okay, do the calculation, 650 plus 4,600. So we have 5,250 minus 4,750. If you get exactly 500, meaning you have done correctly.
Must be the same then to show
Yeah.
that it's correct.
Yeah, because all this figure is already pre-calculated. All are here already, isn't it? So you just put everything in perspective, accordingly. So then you do the calculation. If you don't get this amount, meaning something is wrong. Your process. So you need to check. So you can immediately, decide, or you can determine whether you have done correctly or not. If you don't have the same amount here, meaning it's not correctly done. Okay. Okay, now.
Okay.
Hey, what about your tutorial answer? Did Mission share to you?
Oh yeah. Yeah.
Yeah.
So go back. Whatever that we have covered the tutorial. So you must, go through the answer, and if you don't understand, you can always ask. If you need me to explain, okay, we can make, like extra class for the lecture, just to rectify how to do that tutorial question. Okay. You let me know, yeah, if you need extra. Correct? Okay, man.
Okay.
You have to do first, lah. Don't just doing a lecture. No, not doing lecture. What you don't understand, you tell me, and then we can solve it and explain to you.
Okay.
I only explain what you don't understand. What you already understand, I don't explain. Yeah. Right. So that's all for today. Thank you. Okay, study hard for your test too. Okay.
Okay, sir. Thank you.
Thank
Thank you, sir.
Hello.
Welcome.
Oh, you were talking about the student in the campus, huh? Hi, all of you are here? Oh, not yet. Clara is not here. So how is your work?
Oh, just starting tutorial 4 me.
Huh? Yeah, you find that the topic that what you learn is getting tougher, right? Not like at the beginning, debit credit, but now it's more to like go into a bit slightly complicated, but it's still considered the basic lah. Especially today tutorial is what year-end adjustment, right? So for year-end adjustment, actually from your lecture note. Okay, let me, record. Do you need any, before I forget, do you need any answer guide, like certain tutorial? If you need the answer guide, right, let's say, not to snap the whole question, just like, maybe you can get some number from me, yeah, so that you can actually check if you are able to get the thing done or not.
Oh, just for the final answer.
Yeah,
not
yeah,
the
final
purpose.
answer. Yeah, if you need, you have to let me know. Yeah, because sometimes it's I'm okay with that giving you, but just that I forgot to ask you. Yeah. Then last night I thinking, I said, yeah, oh, I said, yeah, better. It is better that if you have some of the, the answer guide, then it's actually better. Now, if you look at your lecture note, right? Yeah, actually, there's this table that you can actually use. Yeah, okay, year-end adjustment. We are talking about in terms of expenses and income, correct? We are talking about expenses and income. Now, you see, sometimes, right, sometimes the income, let's say rental receipt is our income, right? Rental receives our income. So we're supposed to receive, but we haven't received, meaning our tenant actually give us late. So basically, we already earned, but we haven't received. So this is asset or liability. Asset or liability?
Asset.
Yes, asset. Because we already earn, money haven't received. So meaning our tenant owe us, right? So it's our asset. Correct? Yeah, but sometimes our tenant so good pay us in advance. So meaning we haven't earned but we already received the money. This would be liability or the other way around, correct? Yeah. Okay. Now for expenses is I think okay, from my experience, right? Comparing income and expenses, normally students tend to make mistake on income. Expenses, they are actually quite okay. Expenses is actually how it's like the expenses that you already incurred but you haven't paid. It's just like salaries. Sometimes salary you're supposed to pay on the last day, but then because of maybe you forgot to submit, or the accounts clerk actually did something late, then you submit. Maybe you only the money only released, let's say on the second or third in the following month. So this is actually what accrued, right? We say accrued, meaning already incurred, but we haven't paid. Okay, so in this case, this is actually a liability because we owe. So you owe to your employees, right? Yeah, just like your electricity bill. So you already received the bill. You know that the due date is on the 30th November, but then you only paid today. Today is 2nd December. So it's actually considered as accrued. Yeah, all right. Now, of course, if in the same year, no problem lah. But what happens is in different year. Like let's say, you're supposed to settle, some of the expenses. Normally, you settle at the end of the month, like 31st December. But the thing is, if you can't make it, then you only settle in the following month. Like let's say your following month is January. January is another accounting period. So basically meaning in you did not settle in your previous year, but you settled in the following year. So the thing is, but these expenses that you did not pay is considered as your existing year expenses. It's just like, okay, let's take example 2021 and 2022, right? So let's say 21, in the year of 21, you did not pay, you actually paid in 22, correct? But these expenses belong to 21. Yeah. So when you prepare your final account for 21, you have to add back these expenses. And because you haven't paid, the amount that you haven't paid, it becomes a current liability. It is a current liability, right? Okay, and of course, another situation is where we actually pay in advance. Yeah, we pay in advance. We paid in advance by 1 or 2 months, correct? So in this case, anything that you pay in advance, meaning let's say now is December, you pay until next year January. And next year, January is actually another accounting period. Yeah, so any amount that you paid for next year, January, you have to deduct. Yeah, because you should, because December you already paid, you pay until next year, January. So you have to deduct the month of January. Because what we want is only 12 months. Yeah, year 2021, January to December only. We do not want January 2022. January 2022 is belong to our next accounting period, like that. So you have to minus, so you have to make adjustment. So that's why we call it year-end adjustment. Yeah, it's called year-end adjustment, right? So you can see this table here. Okay, so you follow this table. If you're not sure, please look at this table. Then you will know how are you going to deal with it. Yeah, all right. Okay, so and I believe your lecturer also give you a very, very good example. So in what situation you have to add back, what situation you have to minus. Now, actually, I can give you, I can actually show you a simple table also. So let's say if I put here income expenses, take a bit bigger. Let's say I make it yeah. So make it bigger. So I put here, this one is expenses and this is income, right? Okay, and this one is accrued. Accrued means you need to pay, but you haven't paid. Prepaid, you pay in advance, right? Prepaid is actually you pay in advance, right? Okay, oops. This now. So it is expenses accrued. Expenses accrued meaning you already incurred, but you haven't paid. You already incurred, but you haven't paid. So basically, this one we have to add back. It's a plus. Okay, we have to add back, and this is asset liability. Asset liability.
Accrued is
Liability.
as expenses.
Okay, expenses. You see this box.
As a
Expenses
liability.
accrued.
Yeah.
Meaning you already incurred but you haven't paid. So it's a liability, right? So it's a current liability. So I put CL. Okay, like this. Oops. It doesn't wait. Let's say okay. Yeah. So meaning you have to add back. If you see situation like this, the expenses you have to add back in your current year, like year 21. Yeah, you have to add back. And the amount that you add back, is your current liability. So meaning in your SOPL, you have to add back. Like let's say rental, okay, rental expenses. So this rental, you have to add back the amount that you haven't paid. But the amount that you add back, this is current liability, you put into your SOFP. Yeah, you put in your SOFP as current liability. So in your SOFP, under current liability, you have one item called rental accrued. So you're telling people that, oh, now it's already year end, I haven't paid. Okay, I haven't paid. Yeah, right. So, but your expenses wise, you already add back. Okay, now, and then this one. So, okay, talk about expenses first. But expenses you prepaid, meaning you pay in advance. You pay until next month, January. But next one is another accounting period, which is not belong to our current year. So what we do is we have to minus. We have to minus, yeah. And the amount that we paid in advance is asset or liability.
Asset.
Asset, okay. So it's a current asset, yeah. Okay, it's a current asset. So you can use this table. You can use this table. Doesn't it make sense? So in the future, if you can't decide, right, or sometimes in exam you scared that you panic, okay, yeah, work out this table. Now, how about income? Income accrued. Income accrued means it's our income, but we haven't received. We already earned, but we haven't received. So this one, you have to add back or you have to minus. It's our income, but just that we haven't received the money yet. So in your SOPL, do you treat this as our income? Do you include this as our
No.
income?
No. Include.
Include.
Oh,
Yes.
yeah.
We already earn, we already earn, just that we haven't
It's asset,
received the money. So this one we have to add back, and it's our current asset. Okay, add back is our current asset. Now, income prepaid is we haven't earned, but we received the money already. Haven't earned meaning not yet realized. Can you say it's your current year income? Is it your current year income? No, right? Yeah. Okay.
No.
So you minus, and this one become your current liability. Okay. So this is a very useful table. So you can actually, snap or you can quickly copy, right? I have been using this table to teach those year one student in diploma long time ago. Actually, long time ago. For a long time. I actually not teaching a lower level like this one. Yeah. So this is the table that I always give to the student to guide them. So you can actually copy this down. So the plus or minus is actually the adjustment that you need to make in your SOPL. Yeah. The current liability, current asset is the amount that you adjust. Either you plus or minus in your SOPL, then they are either current asset or current liability. So you You see the as long as it's accrued, okay, as long as accrued is a plus. If a prepaid is a minus, okay, yeah, prepaid it will be a minus, yeah. All right, so this table is very, very useful. So always, have this. So during exam, okay, always put, I saw the student because after I teach, right, they actually put this one, they just scribble a simple table, on the answer booklet. You haven't sat for a physical exam before, yeah, so you don't know. So they actually put in the answer booklet there. Then they can refer. So now, year-end adjustment is very, very important for your exam. Your question 1, definitely you need to apply this. Yeah, you need to apply this. But of course, this particular chapter 9, is very detailed. They actually teach you the double entry. Correct? They actually teach you the double entry. Yeah, so again, double entry, right? So please write down this one, keep. Keep. Yeah, it's very useful. Then later on, when you want to use it, okay, take it out and actually use, yeah, all right? Okay, now, your tutorial question, as usual, long, so many questions, okay? But I think I'm going to do question 3. Yeah, question 3 is quite similar to what you are going to be tested. If you check your past year, it's always question 1. It's always question 1. This is like a, like a compulsory question for your level. It's like at the end of one semester, our expectation is you are able to come up with SOP and SOP, a complete SOP and SOP. Yeah, this is actually our expectation. All right, so you can actually have a look at question 1 to make sure you can master question 1. Yeah, but question 1 alone is only 25 marks, so you still need to master others. Okay, you still need to master others. Now, later, after towards the end of semester, I'll kind of let you know, which topic you can actually focus on. Okay, yeah, I think it's important that you have some guide, or else so many topics, will be a bit, right? Remember to do your correction and hand in by this Sunday, and then your tutorial 8, tutorial 9. So, okay, now, so for the theory, like this one, right, they ask you to explain what is accrued income. So accrued income means the income that we already earned, already realized, but we haven't received the money yet. Now, year-end adjustment is actually application of what concept? Anybody? Application of what concept? Accounting concept. Application of which accounting concept?
Consistency.
No. Year-end adjustment. Consistency? No. It is
Prudence.
not consistency. No. Matching. Yeah, it's actually matching, or we call accrual. Isn't it? Under accrual, if you still remember, under accrual, we said that as long as the expenses already incurred, irregardless of whether it is paid, it is our current year expenses. Remember? For income, as long as we have earned, irregardless of whether money has been received, it is our current year income. Remember? So it's actually accrual. I think this spelling is wrong. Remember or not? So it's actually, this chapter is actually about accrual concept. So that's why you need to make adjustment. Yeah, you need to have year-end adjustment. So you go to adjust, let's say at the end of the year, any expenses that you incur but you haven't paid, this one you go adjust, you to add back, and the amount that you add back is a liability. Yeah, any income that you have earned but you haven't received the money is actually also have to add back, and it is our asset. So you put under current asset. Then you have what? Rental, accrued rental income, or you put rental receivable. Yeah. Now, and you have to, like for example, like the word, see, let's say I said rental receive and receivable. Is there any different? Got different or not? Rental receive and rental receivable. Any different? Yeah, sometimes you might, Yeah, so what is the meaning?
Receive means already happened.
Yeah, okay. This one already received, meaning already earned. Okay, already earned. Receivable?
Supposed to earn but haven't received yet.
Yeah, haven't received yet. Yes, correct. So this is another word we say accrued rental receipt. It's also called accrued, okay, rental, yeah, receive. All right, so meaning receivable mean we haven't received the money. Yeah, okay, we haven't received the money. All right, okay, so I think the question one theory part, I'm going to leave it to you. I believe you are able to get the answer. Yeah, it's like income in advance is the income we received the money, but we haven't earned, not realized yet. So that's why it is not considered as our current income, our current year income, right? Accrued expenses is we already incurred, but we haven't paid. So this one we have to add back. It's our current year expenses, but we haven't paid yet. So it's our current liability. We still owe. Okay, let's say we owe to SCSB, right? Okay, prepaid expenses is the expenses. Let's say insurance. Sometimes we pay in advance. Yeah, so meaning we pay in advance. We paid more than what we should have, so we need to minus. And the amount that we paid in advance is actually our current asset. It's our current asset. All right. Okay, let's look at question 3. Now, question 3 asks you to prepare lecture, rent account, insurance account, commission received account, and rental received account. And ask you to prepare SOPL and SOFP. All right. Okay. So, so then the question here says, this is the trial balance of Ravi as at 31st March as follows. So you have inventory 1st April. So this is your opening inventory. 1st April is opening, correct? Yeah. So this is actually your opening. Okay, opening. Now you see that this is your opening, and you see here there's another inventory, right? There are 2 inventory. This is closing. Correct? Yeah, this is closing. 31st March. Yeah, 31st March. So you see, 1st April, BD is opening. So this will be your closing. Okay, so all the info here is actually your closing. So it's your CD. So your opening, purchases and sales. So purchases is debit side, sales is credit side, rent, insurance, salary, okay, motor vehicle at cost. Commission received, meaning this is an income. You see on the credit side, meaning this is an income. Yeah. Rental received, meaning it's an income. Trade receivable, trade payable, bank balance. Accumulated depreciation, motor vehicle. Yeah, accumulated is on the credit side, right? You see, motor vehicle is debit, accumulated is on the credit. So that's how you get your net book value. Make sense? One debit, one credit, so you can get a different. That's how you get your net book value. So your motor vehicle at cost minus accumulated depreciation equal to net book value. Yeah. Okay, capital is also opening. You see here, BD means opening, yeah. BD means opening, 1st April, and drawings. So these are the info given. So later on, you are asked to prepare SOP and SOFP. It's actually extract, meaning it's not a full account. It's just whatever info you have, you just put it, just fit into your statement. Okay, then here it said rent of 400 not yet paid. Not yet paid meaning? Not yet paid meaning this one? Asset or liability? Rental of 400 not yet
Liability.
paid. Yes, this is a current liability. Meaning this one we have to add back. Yeah, in SOP we have to add back. How about this one? Insurance inclusive 300 paid in advance. So meaning here, this insurance, we already paid 1,006. But out of this 1,006, how much is in advance? How much is in advance? How much is in
300.
advance? 300. Yeah. So this 300 is actually in advance. So this in advance is what? Asset or liability?
Asset.
Okay. So it's a current asset. So this one, what are you going to do? Plus or minus?
Minus.
Yes, minus. Yeah. Because you see, this 300 you already include in 1,006, and you know that this 300 you pay in advance, meaning you pay until the following the following month. So meaning it's not supposed to belong to this month. So that's why you need to minus in the SOPL. Correct? Yeah. Okay. Now, how about the next one? Commission. Okay. Commission of 350 not yet received for the month of March. Yeah. Commission 350 not yet received for the month of March. Meaning, have you earned the commission? Have you
Yeah.
earned the commission?
Not yet. You
You
earn,
sure?
we earn. We
Yeah,
just
earn
not
already.
yet yet.
Yes. Earn already, but money have not received. So current asset or current liability?
Asset.
Yes, this is a current asset. So what are you going to do with this number, this 250? Are you going to add back?
Yeah.
Yes, yeah, you have to add back. All right? Okay, now here. 15 months rental was received, which inclusive 3 months deposit. We received 15 months rental. So remember here we have rental receipt, right? You see, rental receipt is our income. Okay, so refer to this one now. 15 months rental was received, which inclusive 3 months deposit. So meaning
Minus.
so this one we have to minus the 3 months, right? Correct? Yeah, because we only want the 12 months. Because we only want the right? Okay, so this receive, meaning this one is what? Receive, okay, so meaning this is rental received in advance, correct? So asset or liability?
Liability.
Yeah, it's a liability, then we need to minus. All right? Okay, the motor vehicle is to be depreciated at 20% at cost, which amounting to 1,800. To be depreciated at 20% at cost. So this one actually already calculated, right? How much is the motor vehicle? 9,000. Yeah, this one actually already calculated for you. So basically, with this info, your cost is 9,000. You times 20%. So it's actually 1,008. But the question already give you the answer. All right. Okay. So now you need to prepare the rent account, insurance account, the commission, and the rental receipt account. All right. Okay. So do you have problem preparing the lecture? No problem or not?
The depreciation. How do you write?
The depreciation no need to prepare.
No need to be there. Oh.
Yeah. Depreciation. The question did not ask you to prepare depreciation. Only 1, 2, 3, 4 ma. But the depreciation you have to put into your SOPL lah. And also later include in your SOFP.
Even after all this, does the amount on the debit and credit side still the same?
Yeah. Yes. Yeah. Okay. Now this one, they only ask you to prepare rent account, right? Now in your lecture note, I believe you learn where you learn what you have rent account, you have rent account, then you have accrued rent account, right? But this one, they only ask you to prepare one rent account only. Actually, this is the easier one, which I would actually, I think rent account, you only prepare one rent account is easier. Yeah. But in your lecture note, I believe you have two versions, right? Rent account and what? There's another version is you need to prepare two, right? One is rent account, one is rent accrued account. So to record the accrued. But here, this question, they only want you to prepare one account. No need so mafan, okay? So let's say this is your rent account, okay? So your rent account, the first one, rent account. According to the question, we did pay rental, right? Okay or not? Go on, 4,400. We already paid 4,400, yeah? Here? Yeah, okay. We already paid 4,400. So meaning here, forget about the date. So I just put bank. And I just put 440, right? We debit rent and we credit bank, right? Okay, we debit rent, we credit bank. But then the question say, at the end of the year, what happened to the question? The question say, at the end of the year, the question say, 400 not yet paid. Rent of 400 not yet paid. So meaning it's accrued. You see here, say plus, and this 400 is a liability. Okay, so plus, so meaning this is your balance. Now, you need to put into your SRFP, right? So this is your balance CD. So still owe 400, which we haven't paid. So isn't it you add back? So your 4,400 plus your 4,400. So meaning by right, the correct amount for the rental for the year is 4,008. Yeah, the correct amount should be 4,008. So at the end of the month, you transfer to SOP, right? So you should transfer 4,008, correct? Yes. So this account can be closed. Yeah, this account can be closed, right? Now, of course, you can do another version also, right? Another version is instead of I'll show you another version. Another version is like this, right? You put rent account. Okay, of course, this one you put rent. Also, okay. Now, in terms of the accrued, here you put what? You put accrued. You put accrued rent, right? Okay. Then you prepare another account called accrued rent. Right? I think this one you also learn in your in your lecture notes. They put a accrued rent, correct? So here accrued rent, we know that it's 400, right? Okay, and of course this one also the same now. At the end, you put like this one. Yeah. Now, but here you see your double entry. You debit, right? Here is debit, right? So when you post to here is credit. So here you put rent, and you put here 400. And then this account you need to rent, accrued rent account is a liability. Yeah, it's a liability. So what you do is you need to close this account. So when you close, you put balance CD. Right? You put balance CD 400, and then you brought forward. So yeah, okay, when you go to the next month, you brought forward, then you put like this. Right? So you put 400. Yeah. Now, is this correct? Fair enough. Betul kah? Do like this. So you can see,
correct.
I show you both versions. Yeah, I show you both versions. To be very frank, last night I was actually doing revision because I already forgotten how to do the second version. Because what we normally do is we do first version. The second version is so mafan. You see a lot, you realize? But do you get the same answer? Yes. You get the same answer. But of course, as a beginner, okay, as a beginner learners, right? Yeah, we will show you, the second version now. So you see your balance. Okay, see you say it's a liability. Your balance BD will be on the credit side. See you say it's a liability is actually on the credit side. So here you tell people that the one already paid is 4,400. 400 haven't paid yet. So very, very clear, we haven't paid yet. So we put accrued on, then we double entry to accrued rent account. And this 400, when are we going to pay? In the following month. So you're actually carried down and brought down to the following month. Right? So you see, whether you do this version or this version, the outcome is the same now. So you see here, you also can put like this one. Oh, samaka. So meaning this account is actually combined of these two, right? Isn't it? You plus these two. Yeah. These two accounts you plus together. Right? Right? You plus this account, these two become this one. Okay? Okay? So which one do you prefer? Okay, my answer for this question is actually this version. Yeah. Do you have problem to prepare this version? Now, be careful in the exam. If in exam, the question say rent account, accrued rent, so you know that it's this version, the second version. Yeah, if the question only mentioned like this question only say rent account, so this is the first version. So we actually do everything here. So we put balance CDBD. Okay, is that all right? Yes. Okay. So I will show you one. Right. So this one you can actually try on your own. So I am going to put quite a lot. Yeah. So I'm going to show you only the version 1, meaning this one. Okay. So rent is here. Yeah. Okay. Then next we're going to look at its insurance. Okay. What happened to our insurance account? So insurance account is, if you refer to your question, for insurance we'll have this one we pay in advance. So we already paid 1,006, but 300 is in advance. Okay. Now, so anything that we already paid, we put bank, right? We credit bank with debit insurance. Okay, but then we know that 300 is in advance. In advance meaning it doesn't belong to our current month, meaning we need to minus. So if you want to minus, you need to put on the credit side, isn't it? Right? You need to put on the credit side. And this amount you are going to carry it down to the following month. So here you put balance CD. Okay, you put balance CD, right? So here you put 300. So you need to minus. So at the end, how much do you charge to your SOPL? It's actually only 1,003. It's actually only 1,003. Correct? Right? Yeah, it's actually only 1,003. Right? Now, actually, these two should be the other way around. I should put, yeah, actually should be the other way around. So normally it's like this. Your balance CD is the last. And here is SOPL. It's 1,003. Correct? Make sense? We paid 1,006, but we know that we paid 300 in advance. So the 300 we have to minus. So charge to SOPL is only 1,003. Okay, charge to SOPL is only 1,003. All right, okay, okay. Yeah, so I do up to here. All right, and then the next one will be commission received. Commission received account. Right, okay, so for commission received, so what did the question say? How much we received? Okay, we received 3,650, okay, already in our bank account. And then here says 350 not yet received for the month. Oh, well, meaning we have earned more than 3,650, right? Because here say commission of 350 not yet received. Meaning we already earned, but we haven't received the money. And we received more than 3,650, right? We received more than that. All right. So when we receive with debit bank, we credit commission received account, right? So here you put bank, okay? Yeah, this amount, right? And we know that we have already earned, we earned another 350, just that we haven't received. Yeah, so when we are going to receive the following month, so we put here, so we add back. So that we add back. So at the end, when you close your account, you post your SOPL is actually more than 3,650. So it should be a 4,000. Yeah. So in total during the month, our total commission that we receive should be 4,000. Right? Just that the 350 already earned, but we haven't received the money. Okay, already earned, but we haven't received the money. Yeah. All right. Okay, and this one, the rental received account. Okay, the rental received account. Okay, now what happened to the rental received? So rental received here, we saw here we have 6,000. We received 6,000. Okay, and the question here says, received which inclusive 3 months deposit. Okay, yeah, 3 months deposit. So 3 months deposit is 15 months. So this one you need to calculate how much per month. And you need to minus the 3-month deposit, right? You need to minus the 3 months deposit. So meaning 6,000 right altogether. So you take 6,000 divided by 15, correct? And times 3. So how much is this? Yeah. Then we have 3 months deposit. So right, so we need to know how much per month. So it's like 400 per month times 3. Oh, so it's 1,002. So meaning the receive in advance is actually 1,002. Yeah. Okay. Inclusive 3-month deposit. So 1,002. All right. So meaning, and this deposit, 3-month deposit is not rental. So you have to actually minus, right? Okay. This 3 months is actually not rental. It's a deposit. So you have to minus. So how much is our rental? Our rental is actually only 4,008. Isn't it correct? It's actually only 4,008, right? Okay, now you know the number, but how do you fit this number into your lecture? Yeah, how do you fit this number into your lecture? So what we do is, here we receive, right? We receive 6,000. But we know that 1,002 is actually deposit. Yeah, deposit, yeah. Okay, so deposit, which is actually not our current year deposit, not our current year rental. So this one will be our balance CD, 1,002. And here, when we post our SOPL, our rental, okay, our rental income is only 4,008. Right? Our rental income is only 4,008. Any question so far? Any question? Clear now? Yes? Any question?
No.
Can yes, Farah, okay, Farah. Can
Yeah.
understand? Yes. So if you don't understand, you have to ask. Don't be shy. Yeah. Because like I told you, I start to a bit worried already. Yeah, I remember I told you. So I really hope everybody can pass because not easy to do receipt because you definitely you will forget most of the things. So don't receipt. You must pass one go. Okay, number 4 is depreciation. Okay, now next we can do SOPL already, right? Okay, then our SOPL is extract one. So okay, let's see. We start from here. Okay, oops. Our SOPL. Yeah. So our SOPL is actually let's put a simple one. You put roughly statement. Profit or loss. Profit or loss. And for the month, okay, ended 31st March. Okay, 31st March. So we don't know which year, never mind. Yeah. Year ended or month ended. It should be year, not month. Yeah. Okay, so here we'll just change to like this. So underline, okay, let's say you need to have 2 columns. So you put RM and RM. So you start with what? Your format, start with sales format. So how much is your sales according to the question? Yeah, so based on the number you can find from your account balance, yeah. So your sales is this month, this much, right? Okay, then you have to less cost of goods sold. Okay, so this is the format. Okay, then how much is your opening stock? Okay, opening stock, the question also give you, right? Okay, this month. Okay, let's put thousands separator. Yeah. All right, okay. Then we can put purchases. All right, okay, purchases. So our purchases, according to the question. So yeah, we check the number from the question. Yeah. All right, okay. So we get this number, and then we have then we less, and we less closing stock. Closing stock is actually in your notes, and your notes number 1. Right, yeah, your notes number 1, which is yeah, okay, your notes number 1. All right. So you get your total cost of goods sold. So your total cost of goods sold like this, all right? And this one, okay, sales minus cost of goods sold, then you get your profit. So I want a negative number. Okay, so I had sales minus cost of goods sold. So this is your profit. So this is called gross profit. So this is the format that you have to memorize now, actually. For in the exam, for question 1, for question 1, yeah, gross profit. Now, after gross profit will be followed by normally we say other income. Okay, normally we say other income. So of course, this one you can calculate or you can underline. Yeah. Now, for this question, what other income do we have? Now, remember just now we actually prepare commission received and rental received. Okay, so commission received, right? And then we have rental received. Okay, so commission received and rental received. Now, actually, we already have the number. We calculated. Now, rental received. Which number do you take? This one. Right. We take this one. SOPL. Now we are doing SOPL, right? So this number will come to here. So our rental received, which is 4,000. So commission received, we take the number from this account here, correct? This one. Yeah. You look at your SOPL. Right. So it's actually 4,000. Okay. Yeah, so actually you already calculated. So you just state the number. So So SOPL goes to SOPL. Balance CD, this balance CD goes to where? This one will goes to your SOP. Right? So as long as all the CD will go to SOP. Okay, this one later. Okay, now we get the SOPL done first. Yeah. So your commission received will be 4,000. Okay, so I think we only have these two right now. Another way of doing this one is, okay, now for accounting student, if you are good enough, right? Normally what we do is like this. This is what we receive, right? Plus 350 that we haven't received but we already earned, correct? Okay, what about rental receipt? This rental receipt is altogether we receive this much, but we need to minus the deposit. So isn't it? Correct? Yes. So you see the number, correct? No? Yeah, so you see this one is minus, right? So is it correct minus? Yes. 6,000 here, you minus now. Right? This one, is it a plus? Yes, then 3,650. Okay, already earned but haven't received, so we have to add back. Yeah. So another way, another working you can show is like this. But if the question say, please prepare lecture, so no choice. You must prepare the lecture. Okay, you must prepare the lecture. This one, this is the lecture. Yeah, so it depends on the question. If a question did not mention you need to prepare lecture, so I will ask you to do SOPL, then your working can be like this. So you see this working, if you are familiar with the table that I give you, this one, so you know already, right? Income accrued is a plus, right? So you know that you have to add back. So you just take whatever you have received plus the one that you haven't received. Yeah, can? So it's actually something like this. Okay, so we only have two income. Okay, so now we continue. So this one, we add them up. Yeah, all right. So we have this amount. Okay, and this one, we have this. All right, okay. Then we less expenses. So when we less expenses, so we're going to dig up what are your expenses. Yeah, so we're going to dig all the expenses that you need to do. So the expenses like what? Rent, which you already prepared the account now. This one also we can use bracket. Remember, we already paid for, but we know that we accrued, another month, so we add back. Right? So we add back. So this is your working. Oh, okay. Another one is insurance, correct? Yes, the one that is not done. Right? Okay. About the insurance, we know that we already paid this much, but we know we paid in advance, so we have to minus. Yeah? So prepaid, you have to minus. So here is 1,003. Okay, you see, this number, isn't it the same as in your account here? So if we come back to rent, isn't it the same? This number, 4,008, right? This number, 4,008. Okay, two different versions, right? So no matter which version you use, the number is the same. Yeah, okay, the number is the same. Right, okay, what else? Any other expenses? Yeah, I think we go back on this.
Miss, the one the working in the bracket got marks up.
Yes. Yes.
Oh.
Now, in exam, the question one that I talk about, I believe you use your working should be in bracket like this, not T account anymore. Because not enough time, because preparing T account is very time consuming. Yeah, so you got to learn how to use, bracket to express, whether it's prepared or accrued. So you see, if you know how to use bracket, it's much easier than you prepare T account, right? T account is very tedious, isn't it? Fair enough. Yeah.
Yeah.
So, but as a beginner, we teach you T account. But once you're used to it, right, basically we don't do T account anymore. We just use bracket. Okay, then we have salary. Okay, salary, according to the question, there's no adjustment. So, with no adjustment, we just take whatever that we have paid. Yeah, we just take whatever that we have paid. So, it's this number. And then we have depreciation. Depreciation, okay, this one also you put your working, like this. This is what we call working. Now, in accounting, we want you to show working. So all the brackets actually working. Now, if you, okay, when I was a student, a long time ago, when I was 16 years old, first time doing bookkeeping. Now, see question like this, like this one, let's say like this one, there's year-end adjustment, right? This one. If I don't show my working in bracket, then the teacher will ask, Ms. Chan, how do you get this number? Where is your working? How do you get this number? You ask you. If you cannot explain, they say, so you cheat lah. Isn't it? Because you should show working. If you show working, then I know you know how to do law. If there's no working, then can I say you cheat? Especially now online. Right? Yeah, especially now online. I realized, those accounting classes one. Yeah. So what they do is, they don't have any working, no working at all, but then the answer is correct. Then right, I mean that one is test lah. So I purposely go and ask the student. I suspect it's actually cheating. I purposely ask if the student really understand, know how to do, no matter how you know how to put in the number, right? So I ask you cannot answer me. So it's obviously it's cheat already. Because if you know how to do, no matter how I change the question, you still know to add or minus, right? Yeah. So this is the problem. So that's why, and all this working got marks on. So let's say for example this one. Yeah. So normally, like this one, salary. Salary, the question really give you no working, right? No adjustment. So I only give you one tick. One tick means it's 0.5, half mark. Like this one, there's a working. So this one, I will give you 2 tick. I see your working is correct. Okay, and this number is correct. So I give you 2 tick. So meaning this one you have 1 mark. And this one you only have half mark. Yeah. Like this one, this working correct, and your number, and you say you type your number okay. So you type your number here, you put 1008. So your number correct? Yes, correct. Okay, so correct. So this is another tick. So this is 1 mark like this. This is how we mark for accounting. So you see, marking accounting paper is not so easy. You have to very alert on whether you're done working or not. No working, no marks one. So you have to be careful. Okay, yeah. So I'll let you know how we actually mark. So like this one got double tick. This one also double tick. So I will see got working or not, and your number correct or not. If correct, everything correct, then double tick. Okay, yeah. So be careful, Right. Okay. So now, we have to get this one done. Okay, almost done already. So this one we have to. Okay, so we calculate the total expenses Okay, so this. And then so these are our total expenses, and this one's supposed to be minus, right? Yeah, because gross profit plus other income, and now we need to minus. Okay, we need to minus. Yeah, so here you already put a minus sign. Okay, so this is your final answer. So your net profit is this number. So this is your net profit. Okay, this is your net profit. Yeah, 6710. Right, this is your net profit. Okay. Now, next part, not finished yet. So we still have another part, right? Okay, so we have SOFP. So again, you put the sole proprietor's name, roughly. Okay, statement of financial, their position, as at 31st March. Yeah, okay, so at the year end. We don't know which year, but okay, right. So we do like this. So whatever info we have, okay, so we just put it in now. Now, so again, we put IM and here, right? Okay, then here is your non-current asset. Okay, so put NCA, just put the form. Okay, NCA. So under NCA, we have what? Yes, we have only one non-current asset. It's our motor vehicle. Yeah. Okay, so it's the cost now. Okay, and then we have the less accumulated depreciation. Now, you look at your question. Now, you have done depreciation, right? So can you tell me what is your working here? What is your working here? You look at your question. You have accumulated depreciation. And this is your accumulated depreciation, right? Oh, so ugly. Okay, this is your accumulated depreciation, right? So this accumulated depreciation is meaning accumulate from when? From when? It accumulated from when? From last year, isn't it? Correct? Yes. From last year, am I right? Meaning this one, have you added current year depreciation? Not yet. Yeah, you haven't added current year. But current year, how much? Current year, how much? Okay, here we already calculated. This one, right? Okay, current year is 1,008. So meaning here, what you have brought down or carried down from previous year is 1,002. Then you need to plus your current year 1,008. Yeah. So this 1,008 is actually from your current year. So meaning your accumulate is your opening plus your current year. Okay, your opening plus your current year. Isn't it? Right? Yeah, your opening plus your current year. Okay? Yeah, the opening plus your current year like this. So in this case, so our actually our cost, yeah, okay, our cost is 9,000. Then you go to minus 3,000, right? So become your net book value. Yeah, all right. So here, okay, so I put here 6,000. So this is basically our net book value. So underline, put a line here. All right, okay, then we continue with current asset. Okay, current asset, highlight. Okay, so what current asset do you have? Now, in your current asset, you have inventory, right? Okay, you have inventory. Now, can you tell me, if you look at this here, you have how many inventory do you have? How many inventory do you have?
Two.
You have two inventory, right? One here and another one here. Okay, which one you're going to put into your SOFP? The opening or the closing in your SOFP?
The closing.
Yeah. Right, in SOIP, we always take closing. Remember, huh? Yeah, in SOIP, it's always the closing. Okay? In SOIP, it's always the closing, right? So it's actually closing, right? Okay, so we put here stock. Then we use the closing. Our closing value is 1,001. Yeah, all right. And then, okay, do we have trade receivable? Yes, we have trade receivable from the question. Okay, now, and what else? So you need to put your what? Accrued, prepaid, isn't it? So do we have what do we have? Yeah, anybody can tell me?
Uh,
Any prepaid? Any accrued? Accrued will be for income now. Prepaid will be for expenses now. Ada tak?
or the commission.
Yes, commission. So this one, what you write is you put commission receivable. Okay, yeah, we are about to receive, right? Okay, receivable. Oh, sudden loss. Okay, how much is commission receivable? According to your question, how much?
350.
250. Any more? Any prepaid expenses or not? Okay, now this one very simple. You see, just now I already put current liability, current asset, right? So it's number 3 and number 4. Commission receivable we already put, right? Okay, this one done. Okay, how about this one? Insurance includes
Insurance.
yeah, insurance, this one, right? You see, current asset, current asset. You see, just now what I asked you, so I asked you, I put down. Then now when you want to do your SRFP easier, you just refer to. So that's why when you read your question, you got to write. Then after you write, right, then you can double check. Then you won't miss the item lah.
The month,
So,
the rental deposit don't count.
the rental deposit is this liability. Now we are doing asset.
Oops, okay.
Okay, now we are doing asset, right? Okay, so this is prepaid, prepaid insurance. Okay, this is prepaid insurance. So our prepaid insurance is 300. Yeah? Yes, it's 300. Okay. Any more? Any more under current asset? Under current asset?
Okay, that's it.
Are you sure?
Oh,
Any
I see.
more?
The rent.
Trade receivable.
Trade receivable already put. I already put trade receivable.
Bank.
Yes, bank. Okay, bank. So bank 1,005. Yeah. All right. So we add them up. Okay, we add them up. Right. So I add them up here. Okay. So this. Okay, and then add. So this is our first half balancing. First half, huh? Okay, this is our first half. Okay, later we check see whether our number correct. Okay, 1,000 separator. Without 1,000 separator is very difficult to read the number. I am actually not used to it. So, okay, equity. Okay, now we come to our equity part. So meaning is our capital, right? Okay, so here we always start from what? Opening capital, right? Okay, so we put capital as at first April. Our first day is 1st April and our last day is yeah. Okay, first our capital is how much? The question tell you capital? Oh God, capital, yeah, 19,700. Right, 19,700. And what do you add? What do you add? Anyone? What do you add? Add.
Drawings.
Drawing is minus. What do you add?
Oh, profit.
Yes, net profit. Yeah. How much? Where do you get your net profit? From here, right?
SOPL.
Yeah, from your SOPL. Okay, so okay, 6710. Right, so you add them up. Okay. Then you minus, but drawing, right? Okay, so we have to minus. Always remember, drawings is minus, so that's why it's on the debit side. So our drawings, according to the question, is this number. Yeah, so put a minus sign in front. All right, so you get this number. So this is, okay, I'll put it here. Okay, so yeah, okay, so this is our closing capital, correct? So we put capital as at 31st March. Yeah, so this is our closing capital. So and then this one you put underline, right, like this. Okay, yeah, and then we continue with. Do we have any non-current liability? No loan, no. Okay, so it's just a simple one. So we jump to current liability. Non-current liability is long-term, the other. Okay. Trade payable, yeah, we have trade payable. Remember your here, see, trade receivable and payable, right? Okay, 2001. Okay, so we put here 2001. Okay, now anything else is on current liability? Okay, if I show you the question just now what I put down. So now we have to consider. Now we need to consider which one?
Accrued rent.
Yes, this one, right? We need to consider. We need to consider this one, right? Correct? This one. Okay, and this one here, right? Yeah. Okay, so meaning this is our rent of 400 not yet paid. So meaning it's an accrued rental. Okay, it's an accrued rental. And this one, 15-month rental received. This is actually rental received in advance. Yeah, all right. Okay, so here, under current liability is accrued. And accrued rent. So accrued rent by 400. And this one is rental received in advance. Received in advance, which is 1,000. Okay. Yeah, all right. Okay. So now then we sum plus. Oops. Okay, sum it up. Right. So this one underline and okay. Now we want to check if our number balance up. Oh, balance? Yes. Okay, so correct. Yeah. So you see, you do question like this, it's actually very exciting. Yeah. You know, all the accounting students, every time after exam, after last time face to face lah. So after hand in the paper everything, then can leave already, right? Then everybody, the first question that I ask a friend is, your account balance or not? Your account balance or not? Everybody asks the same question. Very, very excited. So normally, if you are able to get it balanced, normally not 100%. Normally, if it's balanced, actually your answer should be correct. Yeah, your answer should be correct. But sometimes balance, it doesn't mean the answer is correct, because of double entry. Your debit wrong, your credit, you use back the same number. Yeah, so when you put your number inside here, it still can balance, but it doesn't mean that it's correct. Okay, so there's this list. All right. Yeah. Okay, so this is the one that is nearer. It's actually what you have to do in exam question. Yeah, you go and read your past year. You go and check the question one. Your past year I already uploaded to the Google Classroom, right? So you go and check on that. Yeah. We still have about 25 minutes, so we can do. Which question you want to do next? I let you pick. Which question you want to do? Extra exercise? Or question one no need question one is a theory. Question 2 is actually the version 2. Question 2 is actually the version 2. Question 2 is actually double entry. Yeah, it's actually a double entry. So that's why you have to have an idea. If an expenses that is accrued, meaning you already incurred but you haven't paid, you have to add back. Why? Because it is your current year expenses, just that you haven't paid, but you already incurred. So it's considered your current year expenses according to accrual concept or matching concept. Yeah. Okay. All right. So that is the idea. So when you do the lecture, right? When you do the lecture, you know that you have to add back. Add back means your expenses will be higher. So that's why you add back. If you want to minus, you'll be the other way around. Like expenses, all the expenses on the debit side, because you credit bank, you debit expenses, right? So when you want to minus, you put on the credit side. So if you have prepaid, then you want to minus, so you put on the credit side. Prepaid is we already paid, but it's not in our current year, so you have to minus. Can you get the idea? Okay or not? But again, right, all these things you have to practice. Yeah, you see why I can tell you, very fluent. I know is that plus or minus. This is true practice. Yeah, I've been doing accounting from 16 years old until now. Yeah. So that's why it's very fast to me. It's like part of my life. Yeah, no need to think. Straight away the answer will come out. Yeah, so this is actually true practice. Yeah, the more you do it, the better you are. So it's true practice. So when I was in secondary school, we did a lot of this type of question. And do until you close one eye also, you know whether it's plus or minus. So that's why I give you this one. Make good use of this one. Yeah. You should snap this one down, or you type nicely and put in your notes. This is actually very useful. So I tell you, the plus and minus is adjusted is you use in your SOPL. CLCA is you use in your SOFP. So current liability, current asset. Okay. So if just now all the question I asked, if you're able to get the answer, okay, you are there already, actually. But be careful, don't make mistake. Sometimes if you're careless, then your number is not correct. So if you make a mistake, like let's say you're careless, like you see, like for example here, right? Let's say this one is let's say this one the rent. So if you make a mistake, right? Let's say you put let's say you put okay, minus. So you see, once you put minus, your answer is not 4,008. Instead, your answer is 4,000. So the answer is not correct. Yeah, your answer is not correct. Okay. So if you do it another way around, you see your answer is not correct. So you you put it minus, it becomes 4,000 only. Correct or not? No. Right? Okay. So you have to be careful. Sometimes students do make mistake. Even accounting students, sometimes this type of questions also they make mistake. Yeah, the students will make mistake, Some of them a bit not so sure type, not enough practice type. Yeah, they will make mistake. So if you make mistake, don't blame yourself. I would just say that you need more practice. That's all. You need more practice. Okay, so which other question you want to, or else I give you, or else I give you the answer. Yeah, I will give you the answer guide so that you are more confident in preparing an answer. So I think I should give you what? The SOPL, meaning the amount that you charge with your SOPL, and also, okay. Or I think we can do question 2, but I might not be able to do all, but see how many questions we can do, because question 2 is interesting. Some is like opening is prepared and then closing is accrued. Okay, let's do question 2. Okay, now you see question 2. Okay, question 2, these are the account that they ask you to prepare, right? So you don't have to worry, you just follow. Actually, ABC I can do in one account. Later I can show you. I can do in one account. All ABC combined in one account. This one here, they ask you to do 3. Right? They ask you to do 3. Okay, let's see how you can do it. Where is my, I want this thing. Okay, so I show you, we do it, okay, we do it like side by side. Okay, we do it side by side. So meaning I need 4. Yeah, I try to show you version 1 and version 2. So we need 4. We need 4 T account. Yeah, okay, we need 4 T account. Okay, so we follow the question and follow the question. So then the question say, right, so I show you this one. Now, you say advertising. So you say here, so this is your SRFP, okay? In your SRFP, this one is 31st May 2018. Now, you see or not? This one is 31st May 2018. We look at the date, okay, I circle. And this one, that's it, right? Yeah, this one is opening. This is our opening, okay, from last year. Okay, from last year. So meaning, right, 31st May, this is also equal to 1st June 2017, right? Now, 1st June 2017 until 31st May 2018, isn't it 1 year? So this is our closing line. So you must know how to read the question now. So this is your opening and this is your closing. So meaning the question gives us opening. So in the opening, we have prepaid advertising, okay, from last year, and we have accrued rental receipts. So these two are current assets. Yeah, prepaid now. Last year paid more, cover this year, so it's an asset. Accrued means already earned, but we haven't received, but we are going to receive this year. Yeah. Okay, for current liability, so this one is what? Last year already incurred, but we haven't paid, so we are going to pay this year. Yeah, right. So this is your opening. And then this is your, what happened is this is our closing. Okay, this is our closing. Receipt and payment, so meaning this one is during the year, okay? In between this year, right? 1st June 2017 until 31st May 2018. This is how much we received and this is how much we have paid. So during the year, we received rental 10,000. And during the year, we have paid advertising 600 and we have paid electricity 1,000. Yeah. And the question say additional information at the end of the year. So this is the adjustment that you need to make. So it says advertising in errors as at 31st May 2018 amounted to 200. So meaning at the end of the year, we actually in errors. Errors means haven't paid, right? Yeah, in errors means haven't paid. So at the end of the year, we haven't paid 200. Yeah, we haven't paid 200. All right. Okay. So now we do the advertising. Okay, one by one. All right. So here, according to the question, okay, we start our opening. Opening, what happened to this year and our closing? So our opening is prepaid. Remember, the question said we have a prepaid advertising, right? Okay. prepaid advertising expense account. Okay, yeah, all right. Okay, so this is prepaid, it's an asset. So of course your balance BD is on the debit side. And current asset is on the debit side. So here. Right? Yes? Okay, now. But this one, right? This account we have to this one is actually from last year. So we brought down to this year. Okay, now this year what happened? This year we paid 600, correct? We received 600. So in this case, then we need to transfer this. Yeah, we need to close this account because we already brought to current year, right? So this account we have to close now. So when we close to advertising account. Okay, we close to advertising. Sorry, put short form now. Okay, we close to advertising. All right, we close to advertising 1 to 8. Yeah, all right. Okay, so this account will be closed. Okay, so here we have one account called advertising, right? Expand account. Okay, now double entry. Okay, double entry. So here, this one I put prepaid. That correct? Prepaid advertising expand, right? Okay. Prepaid advertising account. Yeah. So I actually do the double entry. This one come to here. I close this account. Okay, because this one actually brought forward from last year. So when come to this year, this prepaid become realized. So I need to close it now, no more. Become realized meaning it's not a prepaid anymore. So I'm going to close it and I transfer to my advertising account. Okay, so as if this advertising account is our this year expense. Right, it's our this year expense. But here you put prepaid because this number is actually from prepaid advertising account. Yeah. Okay, then what happened during the year? We actually paid another 600 and bank 600, correct? Credit bank, debit advertising. Credit bank, yeah. But then the question tells us, hey, at the end of the year, there are 200 in errors. Now, in errors means already incurred but you haven't paid. So meaning you have to add back, right? Expenses accrued, you have to add, right? Okay. So, but this is accrued. Okay, this is accrued. So you put here 200. So meaning all together. Okay, now then we have another account. I'll show you now. Then we have another account called accrued. Yeah, right, like this, correct? Now, then you have double entry. This one, accrued now. Here you put accrued now. You put up here. Here is debit. It should go to credit. Now, and this one you put what? You put advertising account. Okay. Right? Okay. So, okay, now this one happened at the beginning of the year, brought down from last year, become realized this year. So become realized this year, so you put in the advertising account. Now, this is what happened during the year we paid 600. And then at the end of the year, we accrued 200 haven't paid, so we add back. Okay, we add back and double entry to this account. So now we want to close our account at the end of the year already. Okay, account closed. So this one we close to SOPL, right? SOPL. Okay, so this one will be 2080. Yeah, close to SOPL. So this account closed. Okay, now this account also have to close, right? This one we have to brought forward because we haven't paid them. So we expect to pay this next year. So here we put balance CD. Right, we put balance CD 200. Yeah, all right, okay. So then you brought down to the following year. So here you put balance CD. Now, accrued advertising, is it a liability? Is it a liability?
Yeah.
Oh, correct or not? Your balance PD on the credit side at the end?
Yeah.
Correct or not? Yes. Can you understand? So this is three account plus together. Yeah, three different ones. So the opening is prepared, the closing is accrued. Okay, the closing is accrued. Yeah, okay. So this one closed, huh? Yeah, all right. Okay, so this account is actually closed. Okay, this is actually closed. Now, What happens if I do everything in one account only? So if one account only, my title of the account is this one. I put this one. Right? Okay, now, so if I do only one account, how do I start? How do I start? I start with balance.
Balance BD.
Balance BD on the
Debit.
fairer. Balance BD fairer. Is it balance BD on the debit side? Yes? Yes or no? Is it balance BD on the debit side? How do I start the advertising account? The question says at the opening we have a prepaid. Yeah. So prepaid, the question says is actually a current asset. Current asset means the balance BD on the debit side lah, right? Fairer, correct? Hello. Is Fairer still here? What? You're not sure?
Yeah, I'm not sure.
Because you see in the question, say prepaid is an asset. Prepaid is an asset. Asset means on the debit side. Okay? Yeah. So it's here. Right. So you put balance BD. So this one, the opening is 1 to the end. Right. Okay. Now, and then during the year we paid 600. And then we know that at the end of the year we accrued, right? We accrued 200, which we have to affect. Right, correct? So in total, right? Okay. So if I put yes, then I brought down to the following. Now, so this is one account. One account done everything. I use one account. I can do everything. Now, see you compare. Is it the same? Is that or not? Now you see this one? Okay, I highlight in yellow. Okay, see this one? This yellow is here, right? Correct? Yes, it's here. This yellow, another yellow is here. Correct or not? So maybe I put another color. Green. This green is here, right? So you see this SOPL? Is here, right? Isn't it correct? You see the double entry? Not say double entry lah. It's actually same side lah. This one. So I put this color. You see or not? Yeah. So you see, if you are able to understand, you can actually use one account, everything counted, but you use balance CDPD. Can? Same, right? Instead of you do 3 accounts, I use one account done already. Yeah. So yeah, you can take note of this version so you can practice. So you practice, yeah, like what your question asks you, and then you can do one like this. Yeah, advertising. So you can practice for the rental receipt and electricity expense. You see like the rental, huh? At the beginning is accrued rental receipt, right? Okay, this is our income. Then during the year we receive 10,000. Then at the end of the year, how? At the end of the year, I think at the end of the year, there's accrued, isn't it? Yeah, it's actually accrued. There's actually accrued. Yeah. So meaning for the rental receipt, opening accrued, closing also accrued. How are you going to do this? And then for the electricity, opening is accrued. Okay, opening is accrued, and then at the end of the year is advance. So for electricity, opening is accrued, closing is in advance. So that's why you need 3 accounts. Yeah, you need 3. So here is ABC is advertising, D and E is rental receipt, and FGH is actually electricity. Okay. Now, this sort of question is actually practice makes perfect. Yeah. So you have to understand. Expenses already incurred, it is considered as our current year expense. So that's why you have to add back. Yeah. But if you have paid more than what you should have, okay, you paid until next year. So the next year part have to minus. The part that you minus, the part that you add back is either asset or liability, which you put into your S or FP. Cannot. Pharaoh, you can follow or not? So you have to take note of this. Yeah. So my advice is anything that you don't know, the more you don't know, the more time you need to spend to get yourself understood. Or else you find that forever you don't know. And how are you going to pass your exam? Yeah. All right. So have to do some practice. So if you have any question, you could ask. So I think very soon your test 2 is coming up because this is week 5 already. Yeah. So test 2 is which chapter? Already told you? Listen, I already told you when is your test 2?
Next week.
Oh, next week. Oh.
Next week, yeah.
Wait. Okay, not this one. Oh, this one. Yeah. So your test 2 will be also question 1, 2, 3. Oh, but you know how many topics your test 2?
No.
I don't know. Okay, let me tell you, but I cannot show you because there is your test 2 is
already given, right? I think. I think the lecturer already told us.
Your test 2 is chapter 4, trial balance and financial statement. Chapter 5, accounting concept, which is theory. Chapter 6, accounting for non-current asset, which is the depreciation. Yeah, 4, 5, 6 is chapter 4, 5, 6 for your test 2. Chapter 4, 5, 6.
Okay.
Okay, chapter 4, 5, 6. So right, I think maybe I put into your chat. Yeah. So I'm still waiting for your answer. Yeah, your tutorial. Yeah. So since your test is chapter 4, 5, 6. I think Farrell and Kelvin, you haven't done 4, 5, 6.
Yeah,
Better
4, 5,
hand in
6.
your homework.
Haven't, yeah.
Yeah.
4 isn't 4 and 5 theory. Wait.
No, 5 is theory. 5 is theory. Yes. 4, 5, and 6. Yeah. Chapter 5 is theory. Chapter 5 is theory, accounting concept. Chapter 5, no calculation and all that should be all the theory. So all the theory you have to understand. Yeah.
So this Sunday need to submit the tutorial.
Oh, then you have a lot of homework. Oh, then banyak. Oh. So meaning from chapter 7 onwards is actually mainly for exam already. It's mainly for exam. Yeah. But somehow not necessary. Okay, not necessary. Those topic covered in the test will not come out in the exam. Sometimes topic covered in the test will also come in the exam. But of course, they won't come out the mark is not so high now. Yeah, because already covered in your test like that now. Yeah, so 4, 5, 6 is your test 2. So chapter 4, okay. Just now what we did, right? It's actually your chapter 4. Then just now we did the one just now we did this one yeah, this one chapter 4 actually you need to do this one SOPL, SOFP, and trial balance. Yeah. You know what's trial balance, right? Trial balance. Yeah. So, okay, for Farah and Calvin, since first test I think first test your marks is low, right? Okay, so you see, right? Your test is 50%, 50%, right? Correct? Yes. So you see, this is your test 1 and this is your test 2. Okay, now, so for example, I think one of you get 20, one of you get 21. So tell me, if you want to pass, how many marks you need to get?
40.
Okay, now let's say let's say you, if let's say you just to have what ngam pass lah, ngam pass is 30 lor.
Oh.
But if you want to score 60% on your coursework, because if ngam pass meaning your coursework this is only 50 word, right? But like I say, because we take 50% coursework and 50% final exam, right? So if you want ngam pass your test 2, you must have at least 30. But if you want to score 60, okay, for your coursework, then meaning you need to score 40 marks off, right? If you want to score 60, you need to get 40 marks off. So well, both of you actually very near. So meaning at least your test 2 you must have 30 marks. You must have 30 marks.
Okay.
Yeah, you must have 30 marks. So okay, the chapter that you need to master. Okay, make sure you know trial balance, how to close your account. You see, like just now what we did, you see, like this one, is that this number actually when you post the SLP, right? This is actually chapter 4. So chapter 4, you must know how to do trial balance. So what is trial balance? Trial balance is this one. Trial balance, see this what trial balance? This is trial balance, debit, credit. It must be balanced. So trial balance is you must know which item on the debit, which item on credit. So we might test you this. Okay. So to be safe, you must know the format of trial balance, format of SOPL, must memorize sales, less cost of goods sold, under cost of goods sold, your opening stock, purchases, closing stock. Okay, but of course, if I test you more complicated, you have sales less return inwards. Okay, then you have less cost of goods sold, opening stock, purchases less return outwards, closing stock. And of course, I can also test you like carriage inward, insurance on purchase, right? Which is part of your purchase, increase your cost of goods sold. Yeah, then less closing stock, gross profit, add other income. Okay, what are your other income and less expenses? Then you count your net profit, right? And this net profit, you're going to transfer. Remember, this net profit you're going to transfer to here, yeah, in your equity part, isn't it? Yeah, all right. Okay, and this is your SIFP. Yeah, so this is your SIP, your non-current asset. Okay, and followed by your current asset. This format actually fits up. Non-current asset followed by current asset, and then this is your first half balance. Equity followed by non-current liability if you have. Yeah, so basically, okay, for SOFP, okay, for SOFP, this is so ugly. This is something wrong. They cannot write too fast. Now, so we start with non-current asset, then we have current asset, right? First part, and then we have equity, then we have non-current liability, then we have current liability. This is actually the sequence. So basically, remember your accounting equation is your asset equal to equity plus liability. Yeah, so you must follow this sequence. So this is the format that you have to memorize. Okay, so this is chapter 4. Chapter 5 is actually all the theory, your accounting concept. This one you really have to understand. It's like, okay, so you refer back to your tutorial. Yeah, you need to ask, you must know how to explain, like what's prudence? What is the characteristic of the prudence? What are the keywords that they use to explain prudence? Yeah, so go and really, check on your tutorial. Your tutorial has got a very good question. Or else you go to look at your past year. Yeah, go and try to do your past year. And then the next one is depreciation. Depreciation, actually they talk about capital expenditure, revenue expenditure. Yeah, the depreciation, how to calculate depreciation. How many method of depreciation you have? How many method of depreciation? The depreciation is how many method? You still remember not? Forgot already?
Two.
Two kah, I think.
Yeah, two. Yes, two. What are they? What's the name? What's the name?
Straight line and the other sum up.
Reducing balance. Straight line and reducing balance. Straight line, what is the formula? Straight line, apa itu formula? Formula is what? Cost minus scrap value divided by number of useful life. Or they give you a percentage, also can. How about reducing balance? Reducing balance method always use a percentage. And when you calculate reducing balance method, do you use cost? Do you use cost or net book value? Meaning, time a percentage, right, equal to depreciation. Okay, this one. What do you use? Cost or net book value? I give you multiple choice now. What do you use? For reducing balance method, you use cost or reducing balance method. No, sorry. You use cost or net book value time a percentage equal to the depreciation.
A cost.
No, you use net book value. Only in first year. Only in year one. Only in year one you use cost. Only in year one you use cost. Other than year one, you have to use net book value. Because year one, first time, no net book value yet. Only in year one you use cost. From year two onwards, you need to use net book value. Remember the table that we do? We put cost, depreciation, then net book value. Remember? Like this. Right? Isn't it? Sorry, like this. Right? And then you calculate another year depreciation here. So you use this number to time a percentage, then you calculate the depreciation. So you have to do revision. Yeah. And I tell you, I can honestly tell you, test 2 will be more difficult than test 1. Yeah, because test 1 is simple, like especially question 3, you only do recording on journal entries. Okay, now, what happened if your test 1 plus test 2 is below 50? So meaning you fail your coursework, right? But we still give you chance lah. Okay, here. Now what happened your test 1, test 2 below 50? Macam mana? Let's say your test 1 already 20. Test 2, you get another 20. So it's 40. Oh, 40 is considered fail eh? So how? So I give you make good law. Okay, now. Make good can be any topic. However, let's say if I give you make good, if the full mark, let's say I give you make good lah. Yeah. If my make good is 60 marks, I expect you to score at least half. Okay, at least half. So meaning if full mark is 60, you must score at least 30. Okay, you must score at least 30. Okay, then right, you see your test 1 is 20. So as long as you go for make good, the maximum coursework mark that I give you is only 50. Okay? Yeah. I can only give you 50. I can only give you 50. All right? I can only give you 50. As long as you go for make good, the maximum coursework mark you will get is always 50, no matter how high is your make good test mark. So meaning if you go for make good, there's no chance for you to have your coursework equal to 60 marks. Yeah. So that's why first test is very, very important. So now, okay, no need to look back. You just move forward. Make sure you go and master the 3 chapter, 4, 5, 6. Yeah. Make sure you score as high as possible for the test 2. Okay? Can or not? Yeah?
Okay.
Okay, right. So you are very clear. So start to do revision. I expect you to ask questions. And you can ask me question anytime. You can just, pause the question. You need guidance. You just ask me anytime. Okay, yeah, I'll see your question. Whenever I'm free, I will reply you. All right? Okay. Oh, already 12:38. Yeah, so better go already. Okay, see you. Take care.
Okay,
Yeah.
Miss.
Okay, thank you.
Okay, do
Thank
your
you.
homework, yeah.
Okay, Miss.